A very good morning to everyone. How are you? Ladies and gentlemen, we have a brand new guest on the morning show. It is Ben Hoff, ladies and gentlemen.
Good morning, good morning. Thank you for having me, Rich.
Now, I was awaiting our new sound effects of a round of applause.
Yeah, I mean...
The guys in the gallery are asleep.
Yeah.
They've gone for a drum roll instead.
Just to say I'm the consummate professional that was here ready to go prepped, as Rich has literally walked in, ready to go, and as ever. So yeah, got his coffee.
I've got a double decaf today.
Oh, decaf?
Yeah.
You had 3 already this morning?
It's so exciting with Barclays, levers, relics, Russia, Ukraine. We've got so much to speak about. But first of all, Ben Hoff, introduce yourself to the world.
How do you describe yourself?
Where are you from?
Yorkshire originally, so another one of the
Good.
strong northern contingent. We've got a few on the PCM desk, Wardy and Tom, shout
We
out
do.
to them. And then we went to uni in Exeter, so I was down there, and then I've been in London doing sort of this for the last 12 years. So I started off interdealer broker,
Right.
and then worked for a competitor for 5 years, and then I've been here for the last...
You're not going to name them, are you?
No, there are 3 letters synonym that are a smaller UK name, but very good.
Sachs.
Not quite. So I've been doing this a long time, lots of time speaking with clients, lots of time in the markets as such. So yeah,
How long have you been at IG then?
it's 6 years in August.
Okay, you've never answered the phone to me.
I have.
Oh yeah.
I'm just the consummate professional that it was dealt with, move on.
It was so slick. That's right. You couldn't-
No, so we probably, I mean, I haven't worked on Pete's team, so probably why there's not been as much read across.
So whose team are you in?
Monsieur De La Vega.
Now we haven't had Chris De La Vega on the show yet. Every time I go to him, Chris, when are you coming on? Then he pushes Will McCreary in front of him. And now he's pushed you in front of him.
That's exactly it, yeah. Will's on, I think, later as well. So shout out to Will, because Will's stepping up for the team. I felt he'd literally just arrived in the building and I hadn't been on. I was like, come on, Ozzy, you need to pull your finger out, because he's been in 2 minutes and been on TV. So fair play to him.
And you have given us the perfect segue. Look, you're a natural into what is coming up today. So at 8:40 a.m., we've got Confirm and Send. Yes, he's back. Tom Wolstenholme. He also took £20 off ESAR yesterday because there was a big debate going on post-CPI. Of course, that CPI number coming in higher than expected. Tom was market maker to ESAR. ESAR thought the market was going to finish down 1.5% on the day, and it didn't. So Tom is £20 the richer. 8:58 a.m., all sessions opening bell with Big Will that we've just been talking about. 9:40 a.m., Trading Experiences with James Gordon. That's a great series so far. We saw about the time that he smashed his keyboard over his desk.
He won't be the first or the last.
Last week. And then 10:05, Ben, take it away to pronounce that surname.
Thanks very much, Rich. Trade Expectations with Patrick Tominu.
Yeah.
Tominu.
Our Scandi friend, Tominius.
Tominius. Oh, very good. You should have done it. Pass the buck.
You'll find that goes on a lot.
I'm sure. In the hot seat this morning, but yeah. Lots to talk about anyway. Lots to talk
Yeah, shall we go any other exciting stories? What would somebody not guess looking at you? You've got a
I
kid.
look remarkably well because I've got a 4-month-old son. So
Well, that's okay.
Yeah,
There we go.
So actually I was meant to come on when we first started, but then I was away for a month on pat leave, so I had a little boy who's great because
What's his name?
sleeps and drinks milk. Rory.
Ah, good name.
Yeah,
Good
so,
Scottish name.
Yeah, well, we got my wife's Welsh, so we got a little bit of the old Celts in us. But
Right.
I'm very English, unfortunately.
Well, 2 weekends' time, we're going to see about that because I am on my way to
See how
Twickenham.
bullish she is then. Yep. It's game on.
Right, we see we're getting a big bit of computer in the screen today. Looks like we are going for some interesting camera angles. So how are you all this morning? What is happening? We've got the dream team in. R6 Senna, Andrew McKelvey. Doesn't look like they're going to give me my chat up on the screen either to see all your comments. Neil, away from the numbers, double Neils. Donald, we spoke about the DAX yesterday. I did rush the DAX put idea So we will go over that again today. And well, just as well, we missed it, I think, because it's just looking incredibly strong this morning as well. Monkey Man Supersonic saying Barclays results look good. So why don't we start off there, Ben Hoff? Let's go straight into Barclays.
Yeah, I'll get up my quick.
After we go into overnight action. Guys, you've got sound effects. What's happening? Have you not learned how to press a button in front of you? That's better. Right, is the DAX overbought in the Ukraine news? We will definitely come to that. Yeah, Zelensky getting sideswiped. He is not even in the conversation.
Yeah.
But Barclays, first of all, Ben.
Yeah, big revenue beat on estimates. So their FIC revenues come in 934 million, estimate 966, but equities is coming at 604. Basically a beat across the board on revenues, being called up 2% in the pre-market. So we'll have a quick guide on that around 8 a.m. I'll have a quick look, but genuinely reads pretty well. Pre-tax profit came in at 1.66 billion at a 1.62 estimate. Cost to income ratio's down. Deposits are up. So I'm just trying to see if there is any sort of weakness within those, but to be honest, it does look pretty positive. The stock has had a massive tear, so
huge. Do you want to have a look at the graph on that one? Let's have a look.
It looks for a nice reading if you're a buyer and bullish over the last. Well, yeah, I mean, look at that.
It's been incredible. So my old boss at Credit Suisse, big shout out to Stephen Dainton for turning Barclays around. He has moved through the ranks. He's now head of investment bank and president of Barclays. And what a great job he's done. My first ever boss at Credit Suisse.
Nice.
And he's done a fantastic job there. Just shows you there were fantastic people at Credit Suisse. Very talented people.
Absolutely, and they're all here at IG now. Though.
And so yeah, we got Barclays looking really strong there. Hopefully that'll take up. Lloyd's all set for a breakout there on the Lloyd's chart. Well, you jumped ahead of me a bit ahead of that one. We've got to wait till we get it up there. Thank you, Caleb. So, yeah, this is what happens then. So 63.80. Where is that going to open this morning? If Barclays is up 2%, that will take us to the breakout level on Lloyd's. And that's before they've got their earnings next week. So big moment for Lloyd's there next week.
Yeah, see that read across UK banks. We'll get some price up around the open, see how we're going. But yeah, I mean, Barclays really does look some solid numbers. So yeah.
That's right. It's almost, you say, you get your cake and eat it. But what about your ice cream on the side? Unilever's.
Unilever's, again, their revenue beats, sales beat as well. So everything this morning does look positive. Sales up across the board, different elements. Their underlying volume was down, but underlying pricing was up 1.3% against a 1.11. Revenue in line, 14.2, estimate 14.21.
I'd say that the only worry here is the comments around the guidance. Very cautious on the start to the new year. So they said that a slower start to the year with subdued market growth for Unilever.
Yeah, expect rising inflation in cocoa and dairy costs to put pressure on margins in 2025. Modest improvement in underlying operating margin for the full year. So probably take that with a pinch of salt. I
don't think they sell salt.
No, Titan Lyle do though.
I must admit, I started to get concerned when I could buy Lynx Africa for £2.25.
Wow.
So I stocked
Very 1990s, I like it.
Oh, mate, it's done the job for 30 years. So yeah, we're seeing reasonable discounts there in the world of, I guess, cosmetic products, deodorant, and
I guess across the board, that sort of inflation play probably hasn't been quite as prevalent in terms of costings compared to other areas of sort of retail, but we'll see. I mean,
So,
So
you know,
big, they cover so much. It's difficult to really price that all in just on the basis of one results. But
yet another demerger. So we're going to get a listing of the ice cream business in London and New York and Amsterdam. So we'll be spread thin there. And we that goes along with a potential listing of Prudential's. Prudential also going to list its, I think, it's Japanese business.
oh, right.
So you're getting all this value created in the FTSE 100. That's why it keeps on going up. Buyback after buyback. Barclays, 10 billion
Yeah, buyback.
over 2 years.
yeah.
Well, not buyback, but return to shareholders in total. Levers.
I did read that. I think Barclays are doing some buyback as well.
Yeah, they've got a buyback, but in total, it's 10 billion over 2 years. The market cap's only 44. It's insane.
Yeah.
Be a little bit more this morning, I think.
Yeah. And then what else have we got?
So Relics.
Yeah, Relics. They have beaten on revenues. If I can find my details.
Let's get that. We'll make this easier for you here. Don't you worry. We'll get this one up. So there you go. Another year of strong underlying growth in revenue and adjusted operating profit. Proposing a full year dividend of 63 pence. Yeah, then we've got operating profit 3.2 billion, pre-tax profit of 3. It's such a tricky one. Do people trade this much?
I wouldn't say tend to trade it. I think people have long term just bought and hold it and probably done well.
Yeah.
But I wouldn't say that we see a lot of short-term like trading in that name in particular. But
look at this chart. You wouldn't want to be short-term. I mean, that's real performance, isn't it?
Yeah, I think it's sort of. I think it's not been in the FTSE that long and probably just performed well over the last sort of 18 months, 2 years. Got in, has just gone from strength to strength. I mean, that data, AI, analytics, it's sort of a little bit of a beacon of hope in the FTSE, really, compared to the US, something like along those lines. Like, we are behind in that area, so I guess
reasonably close. It would need more target upgrades on the back of these results to go much higher, I feel. Although JP Morgan are there at 47.70. So, yeah, tricky one. One that doesn't feel like it'll be going higher today is British American Tobacco.
No. They missed basically on all fronts. So, yeah.
And the stock's had a decent run, actually.
Yeah. If we can get it up. I mean, yeah, look at that. So, I guess... I mean, as I was looking through all the earnings this morning, everything had beaten apart from when I got to bat. So, I mean, the sentiment is still very positive. But yeah, the stock has had. I mean, I can't really see my numbers
Well,
at this stage, but we're up sort of. Where are we? We're up sort of. 28 up to 33. So we've had a 50p increase over the last sort of. Well, it's quite a while now, but.
Well, yeah, so year to date though, it's up a good 12%.
Yeah.
So you don't want to see things like the total free cash flow, which is why you own this thing, right? You don't own it for future growth. For future free cash flow is 7.9 billion sterling, and then they come out with a headline. But we've had taken a 8 billion impairment for a Canadian lawsuit. So their whole year's free cash flow. Going on a lawsuit, which is just part of the drug, sex, and rock and roll of of cigarette companies, isn't it?
Yeah. But we should see.
So, right, European stocks, the big question on everybody's lips. Why is Germany so strong? Is there a reason behind it? Up 1.4% now. As well, is it behind the Ukraine-Russia news this morning? What have we got? Well, we've got Commerzbank looking strong on numbers. We've got Siemens looking strong on numbers. So, it's...
yeah, we've got...
there is substance behind it.
Yeah, absolutely.
For now.
I think sentiment across the board still, like, very, very positive. Even though the state of the German economy is what it is, it seems they're still confident in German stocks. But But
What will be interesting to watch on the open is the MDAX, so the mid-cap German stocks. Now, if we do get some kind of peace settlement, then you want to be involved in Poland, you want to be involved in mid-cap Germany. I'm not sure it makes that much of a difference to Mercedes.
No, it's timings wise, I mean, you're basically looking through background again to what we were when it first came out, aren't you? Back to your energy companies, your oil and gas, your miners. You're looking into the commodities, the minerals. Like Trump's already said, he's negotiating like a strategic minerals relationship between the Ukraine and the US in terms of minerals for arms and all this. So,
it's basically he wants his money back.
Yeah.
In nothing more simple than that is, Ukraine will pay for all the money that we have given them for arms.
Yeah, how that? I mean, this is the chatter I read was that he basically was pushing Europe out of the negotiation as well, and that basically it was going to be the three alphas together, Zelensky, Putin, and him, and then Europe will be mopping up the pieces. So. Yeah. I think we're a long way.
We'll take what it gets.
I think it's a long way off from actually being anywhere near. And
do you think so?
Cost? Well,
I think it'll be done within a couple of weeks.
No, I think that will be. But what I mean is who's picking up the pieces and who's paying for it. That I think. Who's coming out of this deal? And clearly he went in not open-handed to Putin, but he went in fairly open-minded as to giving up stuff immediately to get the conversation moving forwards.
Which is, to be fair, my conspiracy theory is it's always been going on. And it's been going on through Musk. So Musk has been speaking to Putin the whole time. That's Trump's back channel. So he's not speaking to himself. So this deal's already done. It's already been negotiated without Zelensky. Yeah. So, it's not what any of us in Europe would want to see or hear. But has Germany be completely frozen out of it?
Exactly, and I guess is then from a trading perspective, it's probably the reverse of how you anticipated to trade it in terms of that uplift and that like growth in that mid cap and that sector. Actually, costing wise, how are they going to recoup their costs? Who's paying for it? How's the payments going to come out? The payment, all of this that then has the knock-on effect to these companies in terms of
that's right
whether they fear they're actually going to benefit and grow again. So I think the detail will make a huge, but whether we ever get detail from Donald.
And then, of course, unfortunately, he's also got that bargaining chip that if Europe don't agree with what's going on, which they won't, they'll try and make noise about it, tariffs, done.
Exactly.
So he's, you've got to say the art of the deal, taking all bias out of it, and that he's
100%. Like all of the narrative, everything he's done so far is just putting him in the position of leading the conversations. Everything he's doing, like steel and aluminium tariffs, they've not even been formalised, but because he happened to say it on his plane on Sunday night, all of a sudden the market's reflecting responsive, and everyone's on the back foot to rearrange and do everything. But actually, there's nothing. He's just in control again. He's just taking control of the conversation.
Yeah.
He's just,
a bit like
you
Ronnie.
like him. Yeah, big Ronnie.
A bit like Ronnie. Right, Donald asking a very good question. Federal election in Germany on February the 23rd, right? So what coalition are we going to end up with? And is the coalition going to all agree on one thing, and that's that Germany needs fiscal stimulus? They've got a very, very disciplined mentality. Of course, they are German. I know this from living with one. But you are, you're going to see, and she's been away on skiing for 2 weeks. So
for McDonald.
This is
It's possible. Don't ask too many questions.
His
but
girlfriend.
Yeah.
So she is a German economist and very vociferous on the political front. I think she will be Chancellor of Germany one day, which makes me the first man. What's the first man in German?
Well, I don't know. Don't ask me that. Don't put me under that pressure in front of these people, please.
That's a lesson for me to learn German.
Yeah.
So yeah, the person to ask on this is undoubtedly Axel, right? Axel, although we've brought him into made him British now, then
I
he's
think he's been here quite a while now, bless him. But yeah. Yeah.
And so yeah, Axel's the man, and we have got him on air. I think tomorrow, but I will go and ask him on my break as well to give us a little bit of what his expectation is on the German election. Right. Now, Siemens, that's the other. So Siemens had good numbers this morning, better profit despite some weakness in automation. I will try and see if we've got any pre-markets on that yet. Anything on pre-markets?
Yeah, I should have a little update for us. Mainly the UK side of things.
Yeah. Right, so...
But yeah, Barclays up 2%, British American Tacos down 1, Relics down 2, interesting. Tate & Lyle's we haven't talked about, but they're being indicated down 2% as well. Unilever up 3%, interestingly.
And Barclays up 2?
Barclays called up 2,
yeah.
and then we're into some more of the smaller caps. I'm just trying to see if we've got anything from a European perspective.
And of course, it is ex-dividend Thursday as well. So Shell PLC ex-dividend 36 cents. For those of you been watching, what did Goldman Sachs do in Vodafone yesterday? They cracked on. 33 million shares bought back yesterday. I don't know where this is going. But
you're still long.
Oh, I mean, you have to be when you've got 25% of the daily volume is the buyback. It's absolutely absurd. So you can't fight it. You just got to sit and watch for when they end, and one day we might find out what on earth Goldman Sachs are doing, and how they're going to make money out of it. So you saw the rebound yesterday. There was one day when clearly there was a seller matching them off for 37 million shares. But yesterday, back in the market, buying 33 million. So that's, took the stock higher again yesterday, back to 69.20. Let's see what they do today. Right, we've got Bob H in the chat. You have just reminded me. It is my nephew's birthday today, February the 13th. Harvey McDonald, a very happy birthday to you. Before we go to break,
How old?
He is, mate, put me on the spot here. 12.
Oh, nice. Happy birthday, Harvey.
we had the drum roll.
Yeah.
But he's Harvey McDonald, 12 years old, up in Galsby in Scotland. Have a wonderful day at school. And I'll give you a video call with your gift tonight. But it might be paper and it might be red.
Nice. Nice.
That's right, it's some Vodafone stock.
Yeah. Well, that might be more than they're ready anyway in longer term. So yeah, it's an investment for you. Good effort, I like it.
Good stuff. Right. Okay, it's time for break. So we're going to have a quick 2-minute break. Then we're going to come back with today's upgrades, downgrades, and more pre-markets, as well as what the hell was going on with that CPI yesterday. We'll see you after this break.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. And then also on that download centre, you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Welcome back, JFL. Thank you so much for that. Germany doesn't have something like a first man. If they were, they'd be Erster Man.
Erster Man.
So I'm gonna.
Das ist gut.
I'll get Rahel to make. That's a new thing. Germany, you've got a first man coming to you. Right. What are we watching on the Open? I have Legal in General still. I'm in a bit of a mess there, Ben.
Oh dear.
Bit of a mess. So the news came out last Friday, and I managed to create a position over the day with an average of about 248. I think I'm on now, and they look like they've dropped. They look like they were getting back there, but yesterday or the day before was just a terrible day. So I'm a bit stuck in a position there, and then I'm also in Lloyd's for the breakout.
Yeah. Yeah. Well, fingers crossed. Today could be the day. Bit of read across. Fingers crossed.
We also had a huge breakout in copper in the last 4 to 8 hours. So I am long the copper names now: Antofagasta and Freeport-McMoRan.
Okay.
In the States.
Wow,
so
yeah, that's a nice little chart breakout, definitely.
It really is, isn't it? So you've got that one.
Read across from Ukraine into sort of that sector. May even see a little more bounce today.
I hadn't thought of that, to be honest.
Yeah.
For Expo, is definitely one we'll watch in the Open. The defence names. What happens there?
Yes. Yeah. Good point. I mean, they have been bid. Well, early days, a while ago from now. But yeah, we'll have to keep an eye on those.
So let's have a look at British Aerospace here. British Aerospace coming down off a high of 1390. I'm going to add that one. For anybody that wants to create a list, you right click on this, add to watch list, and you can see there I've got a watch list called Defence. Let's watch that one on the Open. It should have Rheinmetall in it, does it? Yes, Rheinmetall. What are they going to do today? Talking about German Chancellor, German positions, Rheinmetall has been an incredible performer since that early 2022. So there we go. It was trading at 100 euros. It's now 727. That is going to be on one to watch for the Open.
Yeah, that's huge.
Right, 15 seconds to the time. Ben Hoch runs this, the Hasselhoff, ringing the bell for the very first time.
Yeah, make sure I'm on time. I've already been briefed by Rich to make sure I'm on time.
There we go. 3, 2, 1.
Ooh, fun bell that is. Retro. Right. Let's have a quick peek there. Now we're looking.
Right. Why is it saying this market is unavailable to trade online?
Barclays opened down 3.7%. So that's,
Barclays is down.
yeah, 3.7%, trading around 296.
Wow.
Probably not what we anticipated on the back of those numbers. And then, yeah, Lloyd's 63.80. So they're holding up okay. They're only down 0.16%. So actually holding relatively firm, Lloyd's. Barclays are down 4.4% now. Take a quick look at some of the other names.
Unilever not even open yet. I'm waiting to try and sell Rheinmetall, and I'm not being allowed to. So is that not open
It may
yet?
not have uncrossed. Let me check for you.
Yeah,
Yeah, delayed uncross. That's down 4.5%.
Right.
6.95 indicating in the uncross. Unilever uncrossing down 5%.
Right, I'm going to...
5.12. So yeah, weaker start than we anticipated. Not quite what we.
Okay, so
Read for.
British Aerospace down 2%. I've shorted some of them. Also waiting for Rheinmetall to open. I would expect that to be down at least 4. If it's not, I'm going to also look to short some of those.
Yeah, that's looking down 4.5% in the uncross at the moment. 6.95.
4.5%, is it?
Yeah.
Right, there's our German mid-cap. Now, that's not the one I want. I want this one, the MDAX. The MDAX, you see, if you're looking at the main DAX, have a look at this one. Potentially just about to break out there with potential future peace in Europe. Boise saying solid bell ring for a rookie. Well done, the Hofmeister.
I was briefed that. Well, I've actually seen a few people try and fail to ring it, so I was like, "Come on, do it properly." But yeah, market FTSE is where are we at the moment? It was trading up. But...
Rheinmetall still not able to open. It's only 2 minutes past, so let's have a look at all the others this morning. What is going on there with the big numbers? Fresnillo looking up 4%. British American Tobacco down 6.
Yeah.
Ouch.
So
Bats.
Energy Centrica down 2.4. Energy company BAE Systems, as we discussed. Weatherspoon's a little bit surprising. Not quite sure what would be leading that, but then Wizz Air, Fresnillo, yep. So the commodities, there we go. Your one, JD Fashion, again, 2.6% this morning. Wow.
Right, there's selling 40 Rheinmetall at 691. That's, and it's right up in my face. Look at that, only down 4 now. Yes, in the Times newspaper this morning, there was discussion around JD Sports.
Right.
So Tempest in the Times, if you want to have a look at the whole story of JD Sports, she lays it, Lauren Almeida lays it out quite well there.
The Times.
In the Times,
Okay.
yeah.
I'll have a load. Ronnie, do you want to read that one, bud?
What's that, sorry?
Ronnie's been the one very anti-JD, isn't he?
He is, yeah. Well, he's anti-anything UK,
Wow.
especially Scottish. Siemens up 6.7%. Let's have a look at what we're seeing in Germany as these stocks open. Slightly delayed. Yeah, Siemens up 7. We've got Commerzbank up 1.2 on the back of numbers.
Yeah.
Lufthansa, of course, the airlines in Europe will be breathing a sigh of relief, being able to potentially fly through Ukrainian airspace again.
Yeah, see that Wizz Air obviously on the UK side of it, but European presence up 4.8%. Then you got Air France, Deutsche Lufthansa, all of them up. So yeah, that I guess that's the Ukraine talks. UK house builders strong this morning. Yeah. So
What are you seeing in the UK house builders there, Ben?
we've got Barclays up 1.27, Barrett's at 154, Persimmon up 1.5%. I guess, is that possibly UK GDP this morning?
Of course, we didn't even cover that.
Yeah, we've had so much to talk about, but yeah, month on month came in 1% year on year, sorry, but yeah, the DEC month on month was a big overperformance. 0.4% it came out ahead of 1.1, so we saw a nice pop in cable. Pound got a bit of strength. I think we were up in cable. I don't know if it's continued since I've been on air, but yeah, we had a nice uplift in the pound on the back of those GDP figures this morning. It's given up a bit, so we jumped from around the 124.85, got up to 125.15. We've come back down to around the 125 mark, but yeah, bit of sterling strength this morning on the back of that GDP.
There we have it. Yeah, cable just dropping back below 125, but pretty much on the 125 spot there. We got oil down 80 basis points this morning. Is that some kind of suggestion of Russian oil coming back to the market?
Well, yeah, I would imagine it probably is, yeah.
Whoa, we got a big mover for Expo. For Expo up 24.
Massive Ukraine exposure. I'll get it up as well, but yeah, that one is one I've had clients look at previously on the back of a bit of a hedge even when Trump came in. People were sort of bullish then at that moment in time, thinking, oh, this could have big possible read across. So yeah, up 15% now, trading in 109.
Tricky to know what the right price is there, isn't it? We'd 108, 113. Go on, make me a market on where that closes today, Ben.
Mate, come on, 4p spread as well. Where are we now? 108, 51, 10, 80. Where do we think today?
115.
I'm not. I would say a couple of p, 112. Get another sort of 1.5% out of it.
I'd be a small buyer, but like a one. I'd make you 13, 15, something like that. So
okay,
yes,
so
we're not far off.
We're not far off. Yeah.
A rounding error. Okay, what else? We saw ThyssenKrupp strong this morning. ThyssenKrupp have had numbers.
Yeah.
But yeah, Siemens, the big heavyweight of the DAX there, up 6. Nestle had numbers which were the worst set of numbers in 20 years, the weakest growth in 20 years, but looks like the market already had it priced, up 5.6.
Yeah, soft spot for Nestle. I'm a Yorkshireman, so they've got big factories up in York.
I was wondering what the connection there. I thought you were going to say you were the Milky Bar kid.
No, I've got a good joke about that, but I'm not going to go into it. So soft spot for them. So yeah, please see them doing well. But didn't realise it was their worst results in 20 years, but you get a 5% bounce. So yeah.
Andrew McKelvey making me very happy there. Legal in General climbing 243 now, up 1.5% today. But probably, I'm guessing Lloyd's is going to be getting hit with Barclays. No, Barclays down 4.7.
Yeah, I mean, have we missed something in that RNS? Have I missed something there in terms of that? There must be something that's underpinning that, unless it's just profit taking. I don't know.
And no support for bats at all. Yeah, 31.59.
Yeah.
Right.
Lloyd's though holding firm, only down 0.16, still at 63.80, 84. So must be some reasonable support around that level, definitely.
BP holding 467. That's interesting with weaker oil. BP now detaching itself from the underlying commodity and trading much more on strategy. Interesting.
It is, yeah, particularly when obviously last week we had the active investor come in and basically say we're going back to being an oil and gas focused business.
That doesn't trade on the oil price.
Yeah, isn't trading on oil price. So it's almost, so surprising. I mean, what is that move now in oil? That's probably the other thing in terms of how aggressive it has moved. 1% in US, Brent down 1% as well. So I mean, that could definitely be one that you're starting to take a bit more of a shorter interest in, basis.
I think so.
How much has that actually got to go? Particularly Brent.
Okay, so shall we go back to FX and commodity world? Let's see. Oh yeah, cable's starting to come off there. 124.92 now, and there's natural gas up 2.8. Copper holding 474. Let's see where the mining stocks are this morning. Miners, there we go. What is happening in mining world?
Yeah, pretty positive read across really. Anto's up a couple of percent. Yeah, Glencore 2%, Rio's only up 0.4, BHP 0.7, Fresnillo stronger. And then, the Ferexpo, obviously big, 15%. So
sometimes stocks just open too high for people to buy them, don't they?
That
20%.
That's one you sort of the Forexpo is purely the reaction to Ukraine. So have you missed a move? Like, this is the thing now in terms of the growth. How much more value is to come, even if there is this resolution in the US? So you sort of like, that's probably one you need to do a little bit more deep dive into.
Oh yeah, definitely.
Like a lot more than just trying to basically trade the move as such and momentum, because you've sort of missed it. But some of the others, like the oil stuff and the momentum in that area, definitely looks like there's probably some opportunities. So yeah, I mean, it's positive read across. We've got a lot of guys who do trade sort of the mining sector.
It's a great sector to trade.
Yeah.
A lot of fun there.
Yeah.
Okay, so
Nat gas though, nat gas up 2.8%. I thought we'd be flooded with more supply. That was stronger than I anticipated.
Let's have a look at that one on the longer term chart.
Yeah, I mean, unless that is very much more just a cyclical play, colder winter and that side of it. But I was a little bit surprised. Obviously, more Russian gas, the availability into the market, to see that one be so strong this morning.
True.
True. So yeah, that one has surprised me a little bit, but maybe there are other facts at play rather than the Ukraine stuff.
It'd be very interesting to see what Trump has in his mind with regards to sanctions and, you know, commodity supply overall.
Yeah.
Actually, let's have a look at how palladium doing. Russia, a huge player in the palladium market. They are 25% of global supply.
Wow, that's at 1.37%. Yeah, that's the March future, so I don't think we trade the spot price, which may well possibly be more volatile on the spot rather than the March future. But yeah, futures are up, but they did pop higher and have drifted back, to be fair. Let's see if we get a little bit more of an insight from when it actually broke. Yeah, so I mean, it's come off quite a lot since. It was back up nearly the 1080 only a few days ago. So we have seen a bit more of a retracement back from that.
JD Sports up 2.5% at 89 pence. EasyJet, is this the kicker for EasyJet? I wonder. It's 530 has always been a tricky level for them to break through. Is this their chance? Oh, 580. When were they up? Must admit, I did not. That was back in December.
Yeah.
Whoa, that gets interesting.
Yeah, it does look like that's a key sort of level, doesn't it? Where they gapped down when that was. I can't see the chart properly, but yeah, basically it looks like there's a little bit of potentially breakout just above where we are now, isn't it? Where you can see a pop back up higher. So this does seem to be sort of a key resistance area, like you say, that 530. I mean, yeah, opening up European aerospace here now. That does seem like a reasonable suggestion, definitely.
Yeah.
So I think if we can get through today and on a positive note, that's got a chance to get to the races for you.
Now, IAG, we've seen some real interesting downgrades there. So, relative to the EasyJet share price, it's only really been one way from October last year. Is that hedge if you're starting to see downgrades? Up 80 basis points this morning.
You've got to think, basically, the smart money are seeing that it has potentially hit its top. So it probably is a reasonable guide. I mean, that chart there, you can see we've come off, and the actual sell-off from that high, if you look in relative terms to the rest of the price chart, is actually quite a big retracement. So I think I don't see it bouncing straight back, making the new highs it has.
It's at least consolidation, isn't it?
That's it. That would be probably the terminology I would use, consolidation around that price.
Yeah. So, that might be an interesting pair, actually. Long EasyJet, short IAG. Might take that one into consideration. But
I missed, there was an upgrade in Bellway. So that may have been why we've seen the UK on the back of GDP and an upgrade in Bellway, why the house builders might have had a bit of a pop in the UK.
Makes sense.
So it does make sense off there.
Right, now Fred shouting in my ear, we've got something up 6%, looks like a good chart. No, not so sweet. We thought it was a good one. It's down on the day. Tate and Lyle. Right, looking at this weekly chart. This is the daily. We're going to pan out to the weekly. And you can see, that is, back. Ooh, yeah, that's not
pretty, is it?
585 potentially we're looking at there would be a breakdown. So shall we check out the news on those this morning?
Yeah, so revenue down 4%, 296 million, cost deflation, mid-single digit, revenue to be mid to single digits percentage lower. So they were wishy-washy in terms of even giving an indication of how weak it was.
Yeah.
So I just think the way they've released that isn't going to feed anyone confidence.
It's not exactly something you'd expect to see growth from, is it?
It's an established market. It's going to be very sort of environment-driven, so to speak. But unless, like you say, unless they're looking to acquire or diversify, it's sort of like. It is what it is, really, to a degree. But yeah, I don't think they've helped themselves by releasing sort of not a number and just said low to single digit decline. So yeah.
Good. Right, so almost time for Fast Markets then. We're going to take a quick 2-minute break and we shall be back for your ideas. And we're going to talk about Heineken. We're going to talk about DAX, put spreads or puts. And anything else you want to drop in the chat there. The Hofmeister, Hasselhoff here, and I are going to go through it. So we'll see you in 2.
Caveat, I have no German descendancy or any experience in German markets before I'm getting peppered with DAX specifics.
Good stuff. Yeah. Right, we'll see you in 2.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer 2 ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Welcome back to Fast Markets, the part of the show when we go through your ideas. And what have you got on your book? What are you looking to put on? We know Donald's looking to put on some DAX downside, aren't we all? Because the move is just unbelievable. But first of all, Ben, you won the toss. You asking me first. What do you want to look at?
What are we looking at this morning? So I was listening to show, was it yesterday, 2 days ago with Ronnie, and you were sort of going back and forth, and you'd pitched Deckers. Hocker, isn't it? Hocker
right.
running shoes. Being the runner you are, the athlete you are.
Most definitely. Yes, we eventually managed to get a position on Deckers last night. So let's find out, what did I do on the mighty Deckers? Well, the stock came off yesterday again, 158 to 154. This thing has been murdered recently. Trading down from 222 to 154. I sold puts for March at the 150 level. I sold puts for April at the 135 level, just in case it keeps on going down. I used that premium from the April puts to buy a 165, 190 in the size of 1/3. So I bought one call, but I sold 3 calls.
Right.
So taking in a lot of premium, a lot of short vol there, and using some of that premium to buy some upside at 165. But I will own them at 150, and I'm happy to own them. So that's Decker's there. I'm going to ask back at you, sir, for Fast Markets. Reporting tonight, Airbnb.
Oh, Airbnb. Let's have a quick peek.
Let's get that up for everybody.
I was on Crocs. Wow. Well, Airbnb looks pretty much, well, it's...
How's that been over the past...
Okay, so it's sold off quite a bit since the whole COVID and everything.
Chart up.
But yeah, it's fairly range bound, or has been.
Ever Airbnb'd your house?
No, although I'm not a million miles from Wimbledon tennis, so I did fancy it once, pay for the old holiday.
Mate, you get $4,000 for a week.
So we're a bit further away. We're not quite in the like proper catchment.
Right.
But yeah,
one of the lesser players.
Yeah, well, yeah. I mean, also, I'd love to say that I'm living in a massive house that old Rafa's going to come and stay in. Or I'm not quite sure. I've got the suite for them, but yeah, just for everyone else. But
my friends had a Chinese player, a female Chinese player, and she paid up $4,000 for the week.
Yeah.
And she went out in the first round.
Always the way. Always the way.
I'm sure they enjoyed the house though.
Who works for IAG, the sports media company. He does all the tennis. So
right.
I only see him. He lives in LA at the moment, but he comes back every year for Wimbledon. He invites me to their house that they have in Wimbledon Village for like parties and stuff. It's like pretty epic, but that's like a palatial pad in Wimbledon Village for the top players, not.
Got to be one of the top areas in London. But what do we think on the stock? It's a hold, according to analysts.
Yeah, hold. Obviously, outperform on the smart score, so you may think there is more to the buying bias. It appears to have had a reasonable following yesterday, traded up at 140.70, 140.48. So I'm going to say I'm going to be a buyer. I think news comes out, it's going to be good. I think results will be good. I think we're going to see it break higher. US sentiment on indices, on equities and everything. So I'll put my neck on the line. I'm not going to stand and be on the fence. I'm going to say it's going up. I won't be back on the show again, but anyway.
It's tough, isn't it? Because I don't think I've ever made money in Airbnb, apart from renting out my rooms. But let's look at March, and I'd probably sell a strangle, something like the 120, 170. Because I don't want to get caught on the upside because I'm bearish on everything else.
Yeah, I mean, that's surrounding it, isn't it? It's around the 140, so 120, 170 makes sense.
Yeah. It's a little bit low on the... Actually, no, the 12 delta on the puts, 11 delta on the calls. But that's taken in $2.20, which, yeah, it's not bad. 1.5%.
Yeah, 1.5%.
Yeah.
I mean, like you say, it's sort of one of those stocks that was in vogue. And is it still in vogue? That would be my hesitation in terms of giving you a definitive answer. Like, I just think it's probably gonna be where we are. But
expected move tonight is $20. Jeez, that's incredible. A $20 move on numbers. This is big, right? So. What's that then? 13%?
Yeah.
I didn't realize Airbnb had moved around that much.
Yeah, it's like a 14-15% move on the back of numbers.
Skeptical.
Yeah, I did read an interesting piece about 75% of the S&P earnings this quarter average earnings per share has been 12.5%. Last year it was 5.5%, and the forecast was 7.3%. So basically, at this moment in time, everything that's reporting earnings-wise, the majority are well above expectation, and US companies are earning. So,
But the average move has been 0.1%. So is it priced in? Hell yes, it is.
yeah.
And this is my whole
Your
problem
option
with the
strategy,
US
yeah,
market.
yeah, exactly. You need
know,
vol.
Higher rates for longer. Yesterday, guaranteed we're not seeing any multiple rate cuts for the rest of the year unless things drastically change. Are we going to see a rate increase? Bank of America saying last night it is not inconceivable that the next move in rates is up.
Yeah, I mean, it goes back. We're in this sort of, we've gone back to a bit of stagflation, very much so. And my very simple mind works in simple ways. But the long and short of it is we have printed money in quantities for the last decade. So inevitably for me, it was going to take a lot longer for the interest rates to actually filter through to the market.
Yeah.
And that's exactly what we've seen now. We're 2 years down the line and rates being held at this sort of
They need to be
4.5 to
6%.
4.25. Yeah.
Yep.
Like you play. It's a massive battle in terms of getting it right, because you have higher interest rates. The layman struggles, but
Yeah.
businesses, banks in particular, don't want them lower again. But it's just that.
Yeah, well, the
time
government
is
needs
taking.
them lower. That's the main problem.
yeah.
Fast markets, Ben. Come on. DAX. We're going to look DAX. So
DAX.
chart up, please, guys. Now, it's going absolutely astronomical. But yesterday we touched on the fact with Elliot that the vol is relatively low. It's mid-teens. No wonder it's mid-teens, because the thing's in such a bull market. But these are the March puts. I know, Donald, you've been waiting a long time for this one. Unfortunately, based in Ireland, so this might not be available on the Irish platform. But where do we look? A 98% put would cost you 1% for March. Do we want to look a little close? Do we think it comes off next week? I don't know if we'll see a move down by next week. But if you do think it goes back to where it was yesterday, then you can pick up the 22,000 puts for 66 ticks, which is absolutely nothing. What's that? 1/3%?
Oh yeah, I mean, yeah, nothing, isn't it?
Well, that's tempting.
25, yes.
But why would Germany sell off? That's the question. Isn't
Well, interestingly, people have been asking a similar question, but Beachy makes a point. It still looks very cheap, consider the US where it is at these record highs.
it? Beachy the Eternal Bull. I call BS on that one.
Well,
because I saw a
happily-
graph yesterday that proved that German tech is the only tech in the world that's more expensive than US tech.
Okay, but the DAX is saying otherwise.
Well, it's not saying it's cheap.
No, I know. It's not saying it's cheap. So yeah, you can call them out. But yeah,
And it's also, that's because the car companies trade on like 7 times earnings.
which is
So
a lot.
yeah, and there's nothing's to say that Ford and GM are going to trade on a higher multiple because of the absolute destruction of capex that's going into electrical vehicles. So I can't buy into Beachy's or the DAX.
I'll
is
take
still
the other
cheap.
side for you. I'm the trend buy. I'm still long. I still think sentiment across the board is just ridiculous. Like, as we touched on, CPI yesterday, massively hot number, market comes off, everyone just buys that opportunity. And we've seen it over the last, month? DeepSeek, NASDAQ next day, bam,
Yeah.
straight back up. Michigan sentiment on Friday, came down Monday, back up.
Well, this is interesting. I was going to say, yes, short, the German 40 is still in the top 100 traders. So, everybody out there is feeling the pain along with myself. But also, Goldman's, give us some hope. Goldman's sending out this morning, a bearish trade is developing. Their strategist is warning that this is the last bullish email he will send for Q1 2025. as the flow demand dynamics are quickly changing. Now, this isn't about Germany. This is about the US and markets generally. But he is calling the top. Goldman's strategist calling the top on the market. My highest conviction is that this massive ability to buy the dip alpha is starting to wane. Discuss. So Goldman's are mega long, basically. Right, Abercrombie & Fitch.
Whoa, old school.
That's not where that top's from, is it?
No branding on me. Abercrombie & Fitch. They've had a bit, I think, if I read rightly.
Big pullback, actually,
Yeah,
considering...
I thought they've had a slight return. Yeah, they've bounced off their lows. I mean...
Oof, my God, look at that.
It has been
horrific.
Mullet. Yeah, I mean, it's a brand that struggles now in this day and age, isn't it?
No, not at all. The complete opposite. It was a complete rebrand after that horrible Netflix documentary detailed just what an awful company it was. Then, look at this since, well, that was the first set of numbers back in September 23, and it went from $40 to $190.
Okay.
And if you go into the shop now, there's some great stuff in there.
Yeah, I mean, I haven't been in for years.
Well, there you go, you see?
Yeah, but that's what. But if I'm not going in, why not? I used to go in there a lot. So if you talk about,
well, that was just for the models.
Yeah, well, yeah. And you got the old perfume through the air conditioning. Yeah.
Genuinely do have it on.
Yeah. Oh, really?
Yeah.
Oh, so you're a massive buyer of Abercrombie, so that's why.
I'm a buyer of the stuff.
Yeah.
Still great hoodies, great.
Yeah.
Superdry went down the lines of changing the industry with really soft kind of material for their t-shirts. Abercrombie have followed that in, and they've done it much better than, unfortunately, Julian Dunkerton has. I didn't believe in it up at 180.
But 100 and...
As it started to come off, I think that there's some decent value here. CEO, a female CEO now, absolutely wonderful woman, speaks a lot of sense in what she's doing. I am short the 85 puts.
Okay, well, that's the money, but yeah. Yeah, I mean, like you say, it has bounced off the lows around here. So where are we? Did we get down to not far long ago? So this could be a good opportunity if you believe in it.
You get
107.17 around there is the low. So we're not far off that low, recent low.
I quite like selling the 95s for $5.
Yeah, it's relatively cheap, isn't it?
That's decent. That's for April, so a little bit further out there. But yeah,
your friend there, I guess.
5% for the stock dropping another 12?
Yeah.
Before you're hit on that.
Yeah. Yeah, that makes sense. I mean, like I said, the product's never been the question really, but it's just how many people want to buy it and be involved in it.
Well, I guess
when we were probably similar growing up, it was all Abercrombie. It was a cult. It was like we joke about the models and stuff, but that's what it was. I'm just not sure it still has that strength.
The vibe.
Yeah.
What does though?
That's a good point.
You're.
I mean, yeah, that's a very good question because obviously the old UK retailers, fast fashion and all that, they had their flurry, but we've seen that decline now. So.
Well, have we? Has Zara, Inditex?
Inditex, yeah. I mean, they're different because they're so established. I was thinking more the like Boohoo, Shine, all those guys.
Yeah. Okay.
They've all struggled. They had their day, and then they've struggled recently.
Wow, look at Zara compared with Abercrombie. Just has gone from strength to strength over the past 6 months. So that does show you
as a loyalty play or that. I think there are more people that would be consistent Zara buyers than consistent Abercrombie buyers.
Yeah, very true.
I just think, and also your market, it's like my mum might still get a piece in Zara or whatever to my wife, we'll go and shop for my children in there. Abercrombie is probably sort of that, like, yeah, I don't know, 20 to 50 type
Your
market.
job for the weekend before you come on next time is to visit an Abercrombie.
Yeah, I'll get myself to Westfield. I'll happily go because it'll be fun once I get in there, but yeah.
I tell you, the something interesting, where did I see this? I think it was on social media, highlighting Westfield. Is it Shepherd's Bush that you would go to?
Yeah, are you talking about the high end? Yeah, I saw it as well.
Wow.
Yeah.
I mean, you know, that used to be, it's a section off to the side, and it used to be vibrant, buzzing, a whole
Burberry,
floor
Gucci,
gone.
Chanel, all of the guys. Yeah, no, yeah, I saw it. I saw that piece as well. That just shows the shift.
Yeah.
Absolutely.
Right, so that's Abercrombie we covered there for you. Mateo and Robin Hood up 20% on numbers last night. Absolutely incredible. Wow. App loving, didn't see that one, Neil, but yeah, Robin Hood. Let's take a quick look at that before we finish.
Yeah, wow, 15%. Absolutely just smashed up higher.
Sorry, 15, yeah, not 20.
But still, pretty solid move. All-time highs just go strength to strength, doesn't it, at the moment?
That is incredible. The past 12 months, we've seen them go from like 18 up to 64. Chart up, please, guys. Yeah, that is very impressive.
Yeah, not so, well, yeah. Not a great look for IG necessarily, but hopefully we'll be coming back.
Well, it's all about the value added that, you know, things like social media and content can give.
Absolutely, here we are.
Right, that's wonderful. Thank you very much for coming on, Mr. Hasselhoff.
Thank you very much, sir. Yeah, that was excellent. Good luck with your...
lot of fans there on the chat. They're saying this guy's much better than Ronnie. It's a bit harsh to you know.
I don't want to. I'm not here to discuss that. And Ronnie's lovely, and he's better, to be honest.
You're Ronnie's.
No, I'm not. No, I'm not saying Ronnie. I'm not saying anything.
Right, brilliant. We're going to break, and Andrew's back soon with Tom Wolstenholme.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hey trader friends, welcome back. It's myself and Tom Wilson home to take you through Confirm and Send, because we had so many clever questions from you guys this week over trading stops, and of course we talked about the ATR as well and how to use that earlier in the week. That was really handy. Big day yesterday.
Big day.
It was unbelievable. Were you across the screens at 1:30 watching the
I was.
chaos unfold?
I was.
Actually, not chaos. It was quite expected. The moment that core figure came out.
Well, because I sit at the trading desk, as soon as 1:30 hit, it was ping, 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 and there's lots of
Yeah.
interesting sounds that they've set up. They have Simpsons sounds
Oh, do they?
for all sorts of things. It was ping, ping, ping going off everywhere, which was quite exciting.
I love your desk, by the way. For those of you that don't know as well, they've got this wonderful, one of the desks over there, I won't say which one, have this wonderful rota where they have like pictures of the famous person they most look like. And so Elliot Harris is Jason Statham.
Because of his boldness.
Yeah, Elliot, I hope you're listening to this. You know, some other people there as well have different, you know, pictures that look like them. I'm not going to reveal who.
What would mine be?
I don't know. I have to check next
I normally
time.
get Richard Hammond.
Do you?
Yeah, that's what I get.
Oh, you're cuter than Richard Hammond.
Yeah.
You're taller.
I'm a bit
You're
taller.
taller.
so
You're
I've got that
taller. He's
going for
definitely
me.
taller.
Yeah.
Right. So let's kick off with the trading stops.
Yes.
Could you give us a demo on trading stops? I think this clever question was from Away with the Numbers, or was it Andrew?
I think it was away from the numbers, and I think it was meant to say trailing stops, not to get anyone in
Yeah,
trouble. But
trailing.
Yes, it was trailing stops.
Yes.
It's trailing stops.
Yeah, trailing stops. So let's show our viewers the trailing stops and what it can do for us, because I love this. I now, this is like a tool that I can't live without. And also, when you use it, it has a little handy T next to your trade.
We'll get to it. We will use the inflation announcement yesterday because it was nice and exciting. We'll use that as the demo and we'll show how it works. So first things first, if we could just bring up my screen, trailing stop, what is it? How do I use it? So a trailing stop automatically adjusts to market movement. This means it will follow your position when the market moves in your favor, and it will lock in your profits and close the position if the market moves against you. So you set it up from the deal ticket. We're going to go through how you do that. We're going to show a nice little demo using yesterday's data. And when setting a trailing stop, you need to set the stop distance as with a normal stop, but you will also set a trailing step, which we will go through, which is the number of points the market needs to move in order for your stop to go with it. So let's have a look. So this is yesterday. So as the inflation announcement was coming through yesterday, I was poised and ready, hoping that we'd have a good opportunity to do a trailing stop. So what we're going to do is we flick back here. So the first thing is the market's just dropped off, and I'm hoping and I'm thinking it's going to come back again, right? So I'm thinking it's a good opportunity to show how this works. So I'm just going to pause it there. So this isn't live. This is using yesterday's data. This is just after 1:30. This is just after the NASDAQ has dropped off there dramatically. So first thing is I'm going to set up a normal stop. Okay, so I've set my size at £2 a point. I've set my stop 50 points away, and this is a regular stop. And we'll set up both just so you can see the difference in how they work. So once I place that deal, we'll see it pop up in the positions tab up there. So this is our regular stop, okay, 50 points away. Now I'm going to set up another one, but this one I'm going to set up trailing. Okay, and I'm going to set it the same distance away so that we can see the difference between the two as it moves. I'm just going to pause it there. So I've set the trailing step as 1. So it's 50 points away, just like a regular stop, but I've set a trailing step of 1. What that means is if the market moves 1 point in my favor, and because I'm long here, that means the market goes up. So if the market goes up 1 point, my stop will move up 1 point.
Yes.
If I were to set it to 5, it would move up every time it moves in my favor, 5 points. But it's nice and exciting to set it for 1 because we'll actually be able to see it move. So we'll carry on playing that. So as we place this stop, we'll see I've now got 2 stops. So I've got 2 positions open. And the number we want to keep an eye on is this second one, the stop level. So it's at 21423.5 at the moment. So I'm hoping the market comes back up. And as you can see, that stop has gone up 1 already. So it's now at 21424.5. So it's moved up by 1. And what we're going to keep an eye on is these 2 dotted lines here, because these are my 2 stops. One regular, one trailing. It's still at 214.5, but the market will pick up, and what we'll see is the stop will start to move up. So, we've got a question.
Yes, we're wondering, we've got a question from the floor. Can you zoom in slightly?
Oh, can I? Well, I want to keep an eye on the positions as well as the chart. So we'll keep going. So what we can see is this stop level is now shooting up.
Yes.
3.1, 3.5.
And it's so clever, isn't it? I mean, this means one
3.6,
can
3.7.
Yeah, one can lock in the profits and not be caught out if the market suddenly turns against you.
Exactly. So what we can see here is this stop. You can see our 2 stops here. We've got 2 lines here. Oh, they're zooming in nicely for me. We've got these 2 lines here. Now, these dotted lines were at the same place when we set up those 2 stops, those 2 different positions. But as you can see, they've separated because the market has moved in my favor, the market's moved up, and so my stop has moved up as well. So that's the increase in distance there. So my stop started at about 21423. It's now at 21443. So it's moved up 20 points as the market has moved up. Crucially, it won't go back down. Okay? So it will move up with you as the market goes up and as it moves in your favor, but it will not come back down again. I think about it a bit like if you attached a piece of string to the price and then attached it to the stop. As the market moves up, it's going to pull your stop up, but if the price comes down, well, the string's all floppy, right? It's not going to move your stop down. As the market gets back to what I set as 50 points, it will then pull the stop up further and further.
And that's fantastic because how many times, myself included, have we walked away or, just glanced away and talked to someone or whatever, and then glanced back, and then you've been caught out, and you haven't been able to lock in all those gains. You've lost some of it because it's just moved against you.
It's almost like having a friend, isn't it?
Yes.
It's kind of, you can, you know, while this was recording, I was off riding my bike, you know, I was off, you know, making coffee, whatever, because the work is being done, right?
Yes.
It's taking my stop.
Well, you're really riding a bike.
I wasn't actually, but
you look fantastic.
but I could
I'm only
have been.
asking this because he's got like expensive gear. He's a raffer kind of guy.
So if we flip back to the video quickly, what we can see now is, as we've been talking, those stops are completely separated, and now we have the trailing stop sitting over 20 points higher than my original stop. So as the market's moved up, that stop has moved with it.
I wish I'd known about this sooner, a lot sooner, because do you know what I've been doing all this time?
Have you been manually moving them up?
If I have multiple legs, so for example, on gold, if I have multiple legs, I initially was moving each individual one. And then I found out on the IG, guys, if you don't know this, like me, I then found out, this is a while ago, I then realized that if I changed the top, it would change all my stops. So I thought I was already being clever there. And then when you showed me this.
Right, okay.
Yeah. When you showed me this, I was like, this is even better. Why didn't I know about this sooner? Monkey Man asking, is this available on IG app as well and on all products?
He's testing me.
He's making that expensive. You know that when you ask a builder and they say, this is going to
cost you.
This is going to cost you. We've opened this up, and yeah, he's making that sound, Monkey Man.
I've never used a trailing stop on the app. I would have to check.
Monkey Man, my eyesight would mean I've never used the trailing stop on the app. So I like setting out my positions on the
It doesn't look like it.
It doesn't look
like it. No, drum roll, yeah.
Drum roll.
No, it doesn't look like it, but that's an interesting point.
Yeah. If it's the app, I tend to use that to close out of trades. Any other questions, please put them here. Is there any way, out of curiosity, because you had such a good session?
No, I lied.
Oh!
It is. Yes, trailing stop is in the app. I've just set one up. Yes, trailing stop is in the app.
Okay, trailing
thank goodness
stop,
for that.
people, is on the app, away from the numbers saying top demo, Tom, thanks. And also, Path Jolly saying, hey, Ange, good morning. So glad I went with your view the other day on oil. Now, is it a good time to go long oil, or do we see it slipping further? Well, it really depends on Trump and Putin, all right, Path Jolly? I would say really keep an eye out on who foots the bill. You heard Rich and Ben talking earlier on. You know, you might get like some headlines coming through in the coming days from Trump, because he said he's going to. What's the phrase he said when he got elected? I'm gonna solve Ukraine before you can even leave the room, or something like that.
Good accent.
Yeah, he said something like that. And I think Ben's on the money. He'll do something, right? He'll announce something, but who picks up the costs? And that is the biggest sign for you, Path Jolly, as to how oil is going to move. Because if it looks like it is going to be further conflict down the line, or it's going to be drawn out, and especially in the Middle East as well, he seems to have forgotten about the Middle East now. He's just turned his attention away from the whole, we're going to build on the Gaza Strip, make it into a tourist spot. You might have missed that whilst you were in sunny...
No, I heard about it. Yeah.
South Africa.
Making some wild claims.
Yeah. Is there any way of using ATR with the trailing stop?
You could use... So we talked about ATR on
Tuesday,
didn't we?
Yeah.
Which is all about looking at the volatility using the tool ATR. So you could use that to help you set your stop distance away. So even if you were setting up a trailing stop, yes, you could use the ATR to find your distance away, and then you would set up your trailing stop using that distance.
Brilliant. And I'm been told that's all we have time for today. And to compliment you about your lovely hair, and it looks very clean and glossy today.
Oh, thank you. I appreciate it.
Everyone in the gallery is Thank you so much. It looks great. It does goes really well with the beard and everything. Monkey Man saying, can we get a demo of that as well? Well, Monkey Man, next time. Tune in Tuesday, people. Trader Tools.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered. Live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
To find a list of all your open trades, click on Positions in the sidebar menu on the left. Here, you'll be able to see key information about each of your trades, including the market name, the size of your position, the opening price, the stop order you chose, and your limit order. You'll also be able to see your profit and loss. Positions are normally sorted in descending order of your latest trades. To change how your positions are listed, you can filter your view by clicking on your preferred factor, like which trades are making you the most money, by selecting profit and loss. You can edit your limit order or stop order by clicking on the figure and entering your desired number. Lastly, you can close your open trades by clicking on the close button next to the relevant trade.
I'm Ben Hemmington and I head up the sustainability function here at IG Group. IG Group pledges 1% of its annual profits and directs this to community initiatives. This is a pretty significant amount of money. We're talking several million each year. And I used to work in the charity sector, so I have first-hand experience of just how much of an impact this money can actually have if it's used wisely. In particular, we are focusing on empowerment through education, so looking to see how we can empower members of our community that are disadvantaged in different ways by providing access to quality education. It's an area of work that we're really proud of and that we're having a really excellent impact in. On the IG Group website, we have a download centre which has got lots of information about our sustainability function. Here you can find out more about our product governance, about responsible investments. We have documents around our diversity and inclusion, including a D&I statement, KPIs and targets, as well as our progress against these. You can also find a number of documents relating to how we manage our environmental impact. Then also on that download centre you can find our community impact report that talks all about our Brighter Future Fund and the impact that it's having.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Planning to make investing your New Year's resolution?
IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
It's hot in here today, isn't it?
Hey, welcome back. We have Will McCreary here with us in the hot seat, and you were just saying it is actually quite hot.
It is hot in here.
Yeah, it is. It's all the lights and everything and the multiple monitors. You can't see, trader friends, but we are surrounded by 4 monitors, actually more than that, with the ones in front of us probably about 8. Welcome to the show. I mean, we've got you on before. This must be all hat to you now. So, all sessions just out of the gate, just shaking up. Now, let's have a look at the winners board first.
Okay, fantastic. So app loving, wow. That is,
Whoa.
30% up. They had some great results coming in to do with sort of mobile phones in the US. Yeah, Robinhood, love to see that. I'm on Robinhood, 15% up. And yeah, Cisco, 6.4% up. Him and Hers, 2.4% up. That's a great stock as well.
Hey, Him and Hers. There's people out there, and Monkey Man as well, who talks about Him and Hers. They had the biggest ad in the Super Bowl.
Yes, exactly. Yeah. That was great, actually. Great sort of like public awareness. It was to do with sort of obesity drugs, wasn't it?
Yeah.
They're sort of calling them out.
But also very interesting, I find, because you know they had this sort of like real controversy behind it, because you know their drugs haven't got the blessing of the FDA, and also
100%, exactly.
the way that advert targeted, I thought was very clever. Targeted the big pharma and said, you know, the Novo Nordisk, the Wegovys, the Ozempics, even though they didn't say it, they suggested it. Well, they're not made for you, person on the street. They're made to print money, right? To make, whereas Him and Hers are positioning themselves like as if they're for Joe Blogs and I know. Mary Jones on the street kind of thing.
Exactly, which is crazy. As I say, they're not regulated. Their products.
And I was like, no one talks about side effects there.
No, I know.
Does anyone care about side effects?
Well,
Aaron Bright was with us talking about what happens if they all become like Death Becomes Her, that movie, he said.
I've not seen that.
Where I think it's Meryl Streep. Is it Meryl Streep? One of those. Glenn Close, Meryl Streep takes a drug to stay young forever. But it goes wrong and she can't die.
Oh no.
And she keeps trying to kill herself and breaking bits but can't die. Yes. Novavax Unity also on the winners list. Rocket Lab, one that's done really well so far. Rocket Lab USA, for those of you that are interested in trading when it comes to exploration, space exploration, Rocket Lab, only one of 2 really, if you wanted to boil it down, companies that can help launch space flights. Let's take a look at some of the losers now. Will, if you may.
Reddit coming in at 15%. That's because Google search is basically sort of ruining their algorithm where people are getting logged out and basically not finding Reddit. So that's down 15%. But I think that's actually a pretty sort of solid buy on the dip on that one. I'm not recommending, obviously. Nikola Corporation down 2.8%. Beyond Meat also 2%. Supermicro just having a few, taking off a few 1.5 from the gains earlier on in the week. And JD.com also 0.84% down.
Interesting to see as well that some of the airlines and some of the techs, I mean, it's pretty much across the board, isn't it? This kind of like in the red here. And let's have a look at the indices. Flat for the Tech 100, pretty much flat, just slightly lower for Wall Street, and we're still seeing the DAX defying gravity there. US 500 up 24 basis, down 24 basis points. I beg your pardon, after a mixed session yesterday. But what a reaction. Let's just remind people of the reaction in the previous session to that CPI figure. Guys, you want to whack up my screen there? Yep, great, here we are. You know, you see, that was just, you know, the most, and it was just across all indices, that big dip there. What was the mood like? Because I was in a pod with the wonderful Emma Hardy, who is the brains behind our data analytics. And she was watching me as I was trying to, you know, and reacting, going, sell, because I was looking at the NASDAQ at that point. And she was like, so how do you know you're going to have that? And I was like I'll explain later, I'm going to explain later. But what was the mood like, your side of the floor?
Yeah, I think it was almost obviously expected. I mean, we were talking about it when we earlier on in the week, and yeah, it just seems like the U.S. economy, just can't get rid of this sort of sticky inflation, can they?
Yeah.
And is it going to? Will they be able to get rid of it with all the sort of tariffs coming in? So whether that will have to, well, may influence Trump, I doubt he will at all get influenced by that. He's so set on his own sort of. Thoughts.
And speaking of influence and trade desk, we're going to go live to the trade desk, so stay right there. We had, when you said Reddit just now, we had a lot of negative remarks from the gallery.
Okay.
Yeah, it's almost like a small census in there. And they go, oh, I hate Reddit. Oh.
I love Reddit.
He loves Reddit.
I'm a big I think it's also
Twitter
great.
friends, there's a lot of booing going on in the gallery. I can barely hear myself think. If you love or hate Reddit, please slam it down here. Boyce, the voice, saying Reddit new active users missed growth expectations too. So yeah, I think Boyce, the voice, is with you guys in the gallery there. I try not to use it very much because I feel like you can kind of like suddenly lose like half an hour of
yeah, you can get down a rabbit hole for sure.
Yeah.
But I love that. I love seeing other people's opinions. I actually use it for sort of, I follow someone, a stock sort of expert or something like that, or trading expert, very sort of technical analysis. And I love like looking at what he says. It's very useful.
Yeah.
Yeah.
Speaking of that, just putting up the Tech 100 for you because, you know, that was the reaction where you see my cursor, 130 yesterday, that CPI number. But like I always say to all you good people out there, don't worry if you haven't got the first reaction. You Fred has said I can't say dirty dogs anymore. So they're saying dirty dogs in there, but apparently I can't anymore. But I'm saying, I'm showing you the chart. You can always trade the bounce, and there was indeed a bounce there. And I mean, this was just classic, because if you look at the volume in my chart below, you can see it's almost like a mirror effect here. And this tells me that this market, the Tech 100, the NASDAQ, it does well when you want to trade reversals, right?
Exactly,
It's very, very consistent on that front until it's not consistent anymore. Monkey Man saying, and all meds have side effects. This is true. Yep. Maybe this is why the Chinese largely do not like having medication at all, but that has other issues. There's no perfection here. Boise says, no, I love Reddit. So Boise's on your side.
There we go, exactly. Yeah, for sure.
Boyce, the voice there. Speaking of Boyce, the voice of the gallery is all saying boo really loudly at your comment. I'm going deaf on the left ear. That's okay. Let's go to Path Jolly. Let's have a look at another thing that has been really, you know, not only jamming the headlines, but also one that we are watching very closely here for you. Let's pull up the daily chart, if I may. This is WTI. And if I add that again, it should show that better for you. There we are. Fantastic. Thank you very much, Caleb, who is the resizing king there. As you can see with my Angers Golden Lions, I did write out there for myself, you know, if we break through 1 to the downside, then head to 2, and we have neatly done that. What it is now, past Jolly, until you hear more from that Trump, Putin, Ukraine, more clarity on that, is we're likely to stay range bound and bounce off that that last perforated golden line there, because until we get something concrete, perhaps maybe even now that China has completely returned from Chinese New Year celebrations, you might hear about more retaliation. Yesterday was the last day, by the way, of Chinese New Year. Thank goodness, because I feel like it's 15 days of Christmas. The trading desk like, and why are you looking so tired? It's like having 15 days of Christmas.
Yeah, fair enough then. Yeah.
15 days. A lot. And so, if we get negative comments from China saying demand is likely to be weak, anything like that, mood music that is bad on the demand side, that could be a further downside for oil. If indeed we hear that actually more and more likely Putin and Trump and of course his BFF might cut a deal, that could also add pressure on the downside to oil as well. Andrew McKilvey asking about gold. Any mood music from clients on your side to do with gold?
Yeah,
Bring up my chart.
Yeah, sure. I mean, obviously, gold is a safe haven, and with these sort of tricky times and inflation going up in the US, investors are definitely sort of piling in on gold. I think it had a bit of a downside yesterday or the day before, and I think it's rallied a bit more. So I'm very bullish on gold. I think it's as I say, it's a strong place to put your investments in right now, with the sort of uncertainty of what's going to happen in the market.
So the thing with gold is, it's outshone the NASDAQ in 2024. This has had such a stellar run. And although we're still early on, how many weeks now? 2025? I can't. We're almost Valentine's Day, people, trader friends. That came quick.
Valentine's Day.
Yeah, I feel, this year, I feel like, wait a minute, we just celebrated
it's crazy,
Christmas, and I'm seeing Easter eggs outside. It's crazy. But although it's still early, right?
Yeah.
Early days yet. The trend of outperformance is continuing, Andrew. Just whacking up my chart here, you can see that we're still firmly in this uptrend. Although we've had some corrections, and we're not anywhere near that all-time high seen around early February. Blame this on you, Ronnie, squarely on you. Every time Ronnie talks about something ad nauseum, it comes down.
Oh, really? Oh, no.
That's why you hear Rich going, don't talk about Vodafone.
Yes.
Do not talk about Vodafone. And maybe now Rich, you're right, Caleb, Rich has gone the other way with Vodafone on some of his strategies. Maybe Ronnie does need to talk a lot about Vodafone.
Exactly.
Please, Ronnie, do not talk about gold. Caleb, if he talks about gold, tell me about it, because he's going to send it down.
But I see sort of further uptake with gold, especially this whole year, to be honest, or even with Trump's tendency over the sort of 4 years, because of how the market's going to fluctuate so much. People are going to see gold as I say, the sort of safe space to put some cash, and I see it increasing for tendency.
Totally. And I think if you are looking long-term, trader friends and Andrew, then I still think this is a long-term bearish.
Definitely.
Not just from the place whereby it is a safe haven, but also because it is a hedge in portfolios. It outperforms when humans, doubt the value of their own ingenuity. It also has a firm place in the hearts of the Chinese and the Indians and central banks around the world. If you can get me any data on how much China's central banks are buying or not buying, please let me know, because that data is hard to come by of late. And also, bear in mind, keep one firm eye on any news whatsoever on quantum. I know quantum computing is still far off, but for some reason, historically, any big mood music surrounding quantum either tends to move gold higher or move it much lower. And the last one, case in point, was when Jensen Huang, at the last NVIDIA speech that he made, poured cold water on quantum and said, oh, guys, it's going to happen, but it's not going to be like for another 3 decades.
Yeah.
And that was way longer than the market expected. And we saw gold, in my humble opinion, that took the shine off. But in terms of outperformance, I think, you know, gold still has this ability to surprise. And we are seeing that slow move up. I mean, it may have some corrections, but it's still on the uptrend longer term. Right. Sure. Where is our next question, gallery? Thank you. I just had Caleb saying we've got Uberman asking about monkey. Here we are, Uber Technologies. Have you
It's had a great rise, hasn't it?
It has had a great rise. Also, are you a fan or do you hate Uber?
Oh, I love Uber. I love Uber. I, you know, don't always, but if I see a black cab run by, I will try and get it just for sort of London sentiment. But Uber is, yeah, fantastic, isn't it?
Yeah.
Yeah, absolutely. And also, I'm bullish on the stock. I think it's got such a place to sort of play in our, you know, future lives. I think I was listening to a podcast and they reckon could be a deal. Well, it's inevitable, apparently, according to them, that a deal with Tesla will happen, and they'll have this sort of, you know, the driverless cars. And so I think it's got a long way to go, this stock.
Now, Monkey Man, for Uber, it has had a good run since end of December.
Yeah.
It has had a rocky ride, depending on you know, when you bought, but it has, you know, relatively done well in the last few years. Also, don't forget, Uber, as Will mentioned, has got many uses. So, have you got lots of family in the US?
I used to live out there, actually.
Ah.
7 years. So I've got lots of friends.
Yeah, and the thing is, when you were there, did you find things quite expensive?
Very, very expensive. It's crazy out there.
Yeah, it's mad, isn't it?
Not enjoyable, actually.
No, what I don't. Every time I go to work in the States, I still don't understand. I guess their salaries are much higher.
Exactly. Yeah.
But I don't understand how anyone can live with the services, the price of services. Things, trader friends, relatively cheap, right? Let's be honest. Like you go to Costco or Sam's store or Walmart, or what's the place that I really hate? I hate Target. I really hate Target. It just feels like a, you know, big mess in there. But the reason why I'm talking about this is because one of the places where you can still see value and you can still see prices being super competitive for consumers is in the ride-sharing space. This is why Lyft shares, Monkey Man, if you're looking at a pair trade, Lyft is unlikely to do as well as Uber. Uber, in my humble opinion, has made great strides, and I have Uber in my longer-term portfolio. Yeah. It has, have you heard of Uber Gold that they're testing?
No.
So Uber Gold is, have you got like any family member with mobility issues or starting to get a bit older now but still wants to do, still very active?
Yeah, definitely, yeah.
So Uber Gold is a function, and you can get it in some places already because they're stress testing this, where you can hit, you know how you got black, you got silver, you got premium, you got green. Yeah. Uber Gold allows you to pay extra for someone who is either a medic, who's trained medic, or someone that can operate a wheelchair and bring that person to the theater for you. Someone who has a car with a ramp, okay? It gets better. Yeah, that gets better. Monkey Man, if you're listening still, I haven't bored you to death there. There's also the drug space, which Uber has made inroads to. Doesn't just want to take you on your rides, wants to deliver your drugs.
Wow.
And by that I mean, you know, you run out of ibuprofen, you run out of your medication. It's making all these strides into making partnerships with medical pharma outfits out there, the equivalent of our Boots, to not just pick you up on your journey to wherever you're going, but your drugs will be in there. So you don't have to go to your local
I mean, yeah,
pharmacy.
definitely. The best way to make money these days is to make someone's life easier, and that is exactly what they're doing, I suppose. Yeah.
Yeah. And Monkey Man, if you want to look at it, we talk about pair trade and helping our trader friends get better positive skew, and you know, there's every single time you hear Rich talk about, you know, Adidas, Nike, you hear us talking about pair trade, FTSE, DAX. Lyft, Uber might be one you want to look out for, because Lyft is being crushed on the margin side, right? They've gone a bit too cheap. They haven't innovated fast enough. Monkey Man says he's still here. You're asleep, Monkey Man. You're drinking coffee and tea. Let's have a look. Away from numbers, asking about. Oh, and before that, Jugger. Thank you, Caleb. Please have a look at Albemarle after this yesterday. We'll have a look at that after. Let's just have a look at Apple first. You an Apple, or are you an Android man? Will?
I am Apple, but I know I'm getting tempted to go to Android. But I think the Apple, it's just so part of the ecosystem, isn't it? That you can't get away from it. You know, if you go to someone's house, they'll have a.
Oh, he's talking about App Lovin'. Hold on.
Oh, sorry.
Is it App Lovin' or Apple? Oh, App Lovin'. Here we are.
So this is up 20%, isn't it?
Yeah. Have a look at that. Oof. Thanks, away from numbers. Here we are. App Lovin'. Yeah, it's up 27.61%. Let's just have a quick look there to see whether there's been any
strong results yesterday.
Yeah, strong results. Q4 total sales up 44%. That's a huge rise to let's call it $1.4 billion there, shall we? Is this one that your clients trade?
You know what? I must admit, until today, I actually wasn't aware of the stock. So it's not something that I've sort of come across. But now, obviously, I'm going to be fully aware of it and sort of seeing which of my clients hold the stock in the ring and sort of find out their view.
Yeah. Jefferies has issued an upgrade in terms of their price target, and it has had a stellar run. Away from numbers, is this one that you hold? Let's have a look at its standing on tip ranks. It's strong buy, and also its ranking in terms of the smart score, 8 for outperform. Also, let's have a look at the fundamentals there for you. Its normalized PE ratio, 380 there. It hasn't got a figure for the dividend yield there. Market cap, decent, 127 billion. A 12-month trailing EPS there, $3.41. Why don't you take us through the client sentiment, Will?
Yeah. Oh, my eyes aren't too good, but 74% of the clients are long. Between 51 and 250 clients of IG have an open position in this. In the last hour, there have been a bit of a sell-off, so 67% have sold, and also 54. There have been 54% buys today. So yeah, obviously a bit of movement going on in that stock.
Nice. Also, let's have a look at the signals as well. I'm not sure there are any yet, but let's just go back to the chart there. For those of you like us who are new to App Lovin', it is basically a work and business model to help companies make money. And who doesn't like that? I mean, the thing about App Lovin' too is that it is fast growing and being used by so many devices at the moment. I think I saw a data point sometime this year saying that 80% of all mobile app downloads were generated by 1% of developers across the Apple App Store and Google Play Store. And what this tells me is, boy, is it hard to make money.
Yeah, no, exactly.
Right? I know so many developers, now most of them from the UK, who've moved to California now. Really? Because they've just found it so difficult. And App Lovin' says that it can help these developers understand how to make money by giving the data analysis via an easy, digestible form. And every company wants that right now, right?
Yeah.
How to have actionable data at your fingertips, much like the IG platform.
Yeah, fantastic.
Let's just go through some of the other questions. We had one earlier on. Jugger, hey, welcome. Was wondering where you were earlier this morning. Please have a look at Albemarle. Is this one that you're familiar with, Will?
So I said again, I didn't quite catch it.
Albemarle.
I have to see
I have to
it.
say, I am not au fait with this. Let's have a look at this chart. It has been heading lower since December this year. Let's have a look at that. Cost cuts help. This is the world's biggest producer of lithium. Interesting.
Okay, interesting. Wow. Yes,
Swung to a quarterly profit as cost cuts help offset low prices of EV battery metal, but adjusted results fell short of analyst expectations. So let's have a look at the chart there for you. It has had a bit of weakness since the beginning of this year.
Yeah.
And I, just with my EV hat on, Jugger, would hazard if I was forced to make take a position,
Yeah.
that you might see more bearishness in this space.
Yeah, I think
And not only that, I believe, if I remember correctly, there's a glut in supply in lithium at the moment. Jugger, I know you're very technical. You can correct me if I'm
that, sure.
wrong. Right, Will, last thoughts. We have to wrap up, but last thoughts for today. What's your day looking like?
Yeah, so to say, just reaching out to clients, finding out their view on the CPI, and sort of see where they're going to trade on the back of that.
Nice.
And
All
also
right.
news of Ukraine and Russia as well.
Cool. Thanks very much, Will. And next up, Beginner's Guide to Options on Market Measures. Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Welcome back to our brand new Market Measure series of a beginner's options trading guide. So it starts today with lesson number 1, understanding call options. That's right, we're going right back to the start and taking you from zero to hero on the options market, thanks to our friends at Tasty. So, welcome to our introductory series on options trading. In response to the valuable feedback from our viewers, we're returning to the fundamentals of options trading. Market Measures will now guide you through the many different concepts of the options market, step by step, empowering you to become a successful retail trader. We'll also take a look at examples in the real world and how market news affects options trading as they become relevant. We're going to go through it all. This is all you need to learn options, and we're going to be posting it on YouTube as well as part of the series. Now, in a previous market measure, we looked at the pros and cons of options versus stock. To summarize that, if you haven't seen it, you learned that a stock option is really just a contract to buy or sell stock at a set price for a limited time. Okay, there's an expiry. Now, that set time is called the expiration date, and the set price is called the strike price. So that's the first two terms you need to learn. Expiration, i.e. what month or day of the month does the option expire. That can even be as quickly as this evening on the close, or it can go out 18 months into the future. The set price is called the strike price. Okay. Now, options represent 100 shares of stock. This is in America, so the US market, which is what the vast majority of our examples will be. One option equals 100 shares of stock. So selling a contract at $1 means it's $100 in real value. So if you buy an option at $1, it costs you $100. Or same idea, a 50-cent contract equals $50 of income or outgoing.
Among the 4 basic options trades, long call, short call, long put and short put, buying a call most closely resembles purchasing 100 shares of stock, offering benefits from stock price increases and unlimited profit potential. Now, purchasing a call involves paying a debit to acquire the contract. Profitability, of course, depends on the stock price rising above the strike price plus the premium paid before the option expires. The maximum loss in a call option trade is limited to the initial premium paid, while the potential profit is unlimited as there is no ceiling on how high the stock price can climb.
And the good thing is here, it's not just all text, right? You're in the classroom, but you don't just have to read. We've also got the exact way that this will look on the Tasty platform, and we've got some graphs for you of P&Ls as well. So buying a call, the debit is equal to the initial premium, right? That's the yellow circle right at the bottom of the page. So 89 cents is where your 613 strike call is offered at, right? So if you look, you see right in the middle column, you go down to 613, where the green rectangular box is, we're looking to buy one. So that's the B1 on the left-hand side, the green box. And we're buying on the offer at 89 cents. Now, if you look to the other 2 yellow circles, because a stock has unlimited upside, right, in theory, then your max profit is exponential. Your max profit is unlimited. Your max loss is the cost that you pay for that option, 89 cents, and we've just told you that that is 100 shares for one option, so that is $89, right? Your max loss is $89. So, yeah, max loss is equal to the debit in that, that's the shorthand DB, and the max profit is unlimited. Now, what about selling a call? Because options are 2 ways, remember, right? You can buy and sell a call, and you can buy and sell a put. That's where a lot of people are going to get confused, but we're going to run through it all. So today, in this class, we're just buying and selling calls. If you choose to sell a call, as demonstrated by the red rectangular box S1 that you see again at the 613 strike. So it's still on the left-hand side, and you would be selling that call at 88 on the bid. So it's 88 cents that you can see in the bottom yellow circle. But this time it's not a debit. Because you sell something, you receive cash in return, and that's a credit. And that credit is equal to the initial premium. So 88 times 100, meaning your maximum profit is $88, right? But your max loss is unlimited because shares have no ceiling. So the credit is equal to the max profit, and the max loss is unlimited.
Now, having a look at these 2 charts will give you a visual idea of the long call profit and the short call profit and how it works. On first glance, it may seem like buying calls is much better than selling calls, as the profit is capped for selling calls while the losses are unlimited. However, what you can't see in the images are that there are a lot of other factors in options trading that we'll discuss later, such as volatility, theta decay, extrinsic value, DTE, and directionality that may make certain option strategies better under certain conditions.
And that's the exciting thing there. We're going to go through all of these. We're going to go through puts, we're going to go through vol, theta, extrinsic value, DTE, days to expiry, and the directionality as well. So by the end of this course, you are going to be an options expert. And what are the takeaways from our beginners options trading? Number 1, understanding call options.
So the key things, if you have to take some notes away with you, this would be it. Buying a call option allows you to buy 100 shares of stock at the strike price that you choose. Selling a call option will allow you to bet against the movement of a stock, but exposes you to undefined risks to the upside and the obligation to short 100 shares if the stock price is above your strike at expiration. And at expiration, long call holders are profitable if the stock price has moved up past the strike price and the premium paid for the option. At expiration, short call holders are profitable if the stock price is below their strike price or above the strike price by less than the credit received for selling the option.
Excellent. Right, we'll have a quick look at this in practice, right at this time. If you're watching this on playback, it is Thursday, the 13th of February. We've just had a bad CPI number. Yesterday, the S&P is trading at $603. All right, that's the Spider 500. Now, let's look at the call option that was talked about in the example, but I've gone out to a March expiry. So there's your March expiry there. And we go down to 613, and that is going to cost $5.98 to buy. Okay, now there is your example down here. $5.98 times 100. So that's going to cost me $598. But then I have the right, not the obligation, to own the S&P 500, the Spider ETF at 613 on March the 21st. Okay, max profit, unlimited, as we said. Max loss, 598. If I clear that one and I sell them instead, remember that CR, right? So it's red there now. And instead of paying $594, this time, if the S&P doesn't go up through 613, then I would pocket $594 and go off to the shops with it.
Nice. Is that why you got those flashy new Nikes?
That's it. The Cortez. That's it. I'd be going to buy a couple of pair of Cortez. So that's it. That is the end of class number 1. I'm going to go through these again on Monday, right? We're going to do the put tomorrow, and then we'll do a recap on Monday of both the calls and puts, put it all together. But for class 1, that is it. Class dismissed.
And see you soon.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Hello, trading friends. I'm trying not to giggle because Caleb's just said something naughty, like I'm strapping you. Trading experiences. Trading experiences is one of the hottest series here at IG, and we are joined by none other than James Gordon, head of tax here at IG. Thank you so much for coming back again. I'm so pleased to see you because I was worried I'd scared you off, and after
every time is scary. Probably. Keep coming back.
And I was so impressed by your keyboard. Everyone's been talking about that.
Of course, a bit of chatter, hasn't it?
Yes, it has. It has. Which then sparked off a trading psychologies segment with Issar. It has also sparked a huge number of our trader friends sharing the sort of music and techniques that they use to reset the mind.
Great.
Yeah.
If you find a thing that can reset your mind, that's a genius little tweak to your psychology. I mean, share them with me, please. I'm still looking for some of these good resets, but music is a good one for sure, and posture actually. I know Izza yesterday was talking about desk layout and stuff like that, but actually, if I dare to plug my old-fashioned blog again, there's a whole section on there about how you sit at your desk and how you have your chin up and stuff, and having your chin up, and that it boosts testosterone, which reduces cortisol, which again gets you out of the fight or flight mode. And this is all science. This is not me making this stuff up. Someone's put someone in a scanner and figured it all out. So yeah, there's some great TED Talks on posture to help your mood, which then helps your trading.
And prevents that chimp from taking over.
The chimp he's always there. Remember, the chimp is always there. So yes, everything to feed him, as it were, keep him happy.
Now, let's have a look at some of the charts that you've sent us. Just popping them up now, if I may. So talk us through this.
Oh, I've got to look over there, right? What have we got here?
This is the Germany, the DAX.
5 minutes, yeah. So this is going back to, so I was a technical trader, right? Super short term, very simple technical analysis in the sense of, I was just looking for support and resistance levels and the breaks of those levels. In this case, the level is actually a pivot level, which I think I mentioned last week is this ludicrous mathematical level that gets printed on charts, and it works because everyone believes it works. It doesn't really work. There's no fundamental reason why it works, but it just does seem to work quite a lot. So yeah, my analysis here is I need to have the moving averages pointing in the right direction. So I had a bespoke indicator using MT4, which tweaked, that looked at the gradient of the moving averages. So there's two moving averages, a 34 EMA and a 14 SMA. If those lined up with the indicator, that said buy or sell. Then you look for the level to break. And then, before all this, obviously, you've planned this all ahead. This is not just me clicking at market. I've seen that level building. I've put my order in to trigger a stop entry order just below the level break. Get in, take your 10 pips, let a second contract run for some more pips. Simple as that. I don't know why it's so hard. Like, it sounds really easy, right?
Yes, it sounds very easy. I like your technique as well. It's like you're like the 10 pip Robin Hood.
Yeah, that's back to one of this whole, that gave me lots of small wins. And for my completely weak mental state, that was much better than running the kind of 3-to-1 thing where you have lots of small losses and then a big win. My brain...
I'm totally with you. I'm totally with you. I am small and often rather than big wins but big losses, and trying to get those big wins to more than offset the losses.
My worst days are always when I break out of that model and I go, oh, let's just go for the big home run today, where I've set my expectations too high. And then suddenly I say, I don't want 10 pips, I want 50 pips. Funny enough, 50 pips don't come along as often as 10 pips do. And most of the time your trade reverses back and knocks you out. So
this is where you can use the IG ATR function and have the average true range over whichever time frame you want, paired with the expected move on the Tasty platform to tell you whether it'll go up or down.
I need to learn this. Where have I been?
It's all on the show. All the Twitter friends have been watching this.
Contrary to popular belief, I actually do some work as well as watching the show. So I need to watch more show because I'm still doing tax, unfortunately.
Bigger Biaz saying, between a good chair to improve posture and a Tidal subscription, you may be right.
Good money well spent, I would say.
Yes. So he's also saying not going to trade today, going with looking at the picture, not feeling well. That's good. We talk about, that's very, very responsible. We talk about optimized trading here, having guardrails, only trading when you're in optimum, right, feeling good, you're feeling calm.
Yeah, perfect.
You're not, what is it?
Self-awareness.
Yeah, as I was saying yesterday, you're not, there's a term for it. That was sparked
like a flow state, or in the zone, or
or in poker they call it
on tilt.
On tilt, because of the tilted. Thank you, Caleb, because of the pinball machine.
And it's worth being aware that is the same. You get the same problems if you're feeling down and ill or whatever. You also have euphoria is also a killer of traders. My worst losses come after my best trades, because suddenly I'm a genius. And I'm like, and you literally can't perceive risk properly anymore. You think everything's easy. And funny enough, then you double up your size or triple up your size and it all goes wrong, and you get blinded and you get caught in the headlights and you freeze and it all goes wrong. So I'm actually more wary of feeling euphoric from good trading which then 3 weeks ago had my best ever options trade, best ever trade in the history of my life. And I suddenly thought, oh, this is working out. And then I gave half of it back in the next 3 days because I was just like, oh yeah, quick, I'll do 0 day options and all that kind of stuff. Because I was euphoric.
Well, you know, we all have days like that, don't we? Let's go to the second chart now, which I'm bringing up here. This is the dollar versus the yen.
Yeah, so this again is another one which actually worked, which is always nice. Again, for some reason, the pivot is working on this one. Again, I've been disciplined. I've not entered until the level has broken. This is just before...
I remember I love it, that post-it note, kill yourself if you
do the pre-entry breakout. It's very true. And the reason I got out of this one is because if you see, that was at 429, and that is just before the US cash market opens. And although this is an exchange rate, the US cash open can just create weird, random noise in any market. So this was book my, what was it, probably 15, 20 pips. And as it actually turned out, that was actually quite a good place to book it. So that is an example of a breakout trade going well. Moving averages are pointing down, levels broken, in, out, quick, go and have a beer or something.
Yeah. Lots of our trader friends sometimes hear me say things like, you know, if I've had a good run early on, I use this term which tickles some of our clients a lot because we got Tiffany who understands Hokkien. I say "kam diam," which just means I'm going to close the shop now, right? Had a good run, even if it's early in the morning. I'm just going to, like you, go for a beer, do something else.
I mean, I sometimes close the shop at 8 a.m. because I'd done a couple of good trades and I knew my euphoria would ruin the rest of the day. I only learned that from experience of ruining my days.
Pull you back in, and then before you know it, you kind of net. I hate those days when you've put in so much effort and then your net is zero.
Yeah. And that happened to me so much. And when I read back through my trading journal, it's just like, you idiot. But it kind of, you learn that by experience.
Hearing it here first, trader friends, head of tax at IG saying, you idiot.
Yes, to me. But that's the way you, unfortunately, sometimes that's the best way to learn, is feeling their own pain. You know, you can hear me saying this, don't do it, but you probably will because you're a human.
Do you often go back and look at your trades and think, oh my goodness, if only I had done it a different way and I had heeded my earlier instructions?
Like all the time. I look back at the charts and just think, what was I seeing? I cannot see what I was seeing at the time. Or very clearly the chimp was in control and there's just mad stuff all over the chart and it doesn't make any sense at all. I think one of the ones on here, if we go further down probably.
Yeah, so this is the DAX again.
So this is a good example of not paying attention to the rules actually, yeah. So here I am, there's a line on the chart, there must have been some historic level there. I am going short, even though the moving averages are pointing very clearly upwards. And I've done it twice. I haven't done it once. Twice I've tried to go completely against the trend. What the hell was I doing? I have no idea. The only good thing about that chart is the stops are very, very tight. So I probably must have acknowledged that I was being stupid and therefore put a very tight stop on. I'm sharing that just because it's slightly embarrassing and it's just there's no reason to be entering trades into that.
No embarrassment here. You are in a safe space. We all share embarrassments. Caleb says this is not true. I'm feeling the pain with my Diageo. Still feeling the pain with Diageo, although it's had a bit of a blip higher recently. And James, away from numbers, saying this is resonating so much with my own journey. Mine too. There's a lot of pain before you get good at something, right? A lot of falling off the bicycle, getting back again. Falling off the bicycle, getting back on again.
Yeah, and just to keep doing it's all about, in the first years, it's about process, not result, right? So if you follow your rules, enter the trade, doesn't matter what the result of the trade is, did you follow the process which you have designed to have some kind of probability of success? Just keep repeating that. There's a great book actually called One Good Trade by a guy in New York who runs this kind of a prop shop. And it's just about one good trade. Do one good trade. Whatever happened in the trade before is irrelevant to your next trade. So just keep doing the process. Keep doing the process. Let the money look after itself.
Yeah.
But the trouble for that is you need a lot of time, probably years. And so you have to stick with it, but it works.
Is this the one that you're talking about? One Good Trade, blue cover here.
Mike.
Wiley
Mike
Trading?
Yes, it probably, yes, that looks like it. Yeah, I mean, it's now, I mean, I read that, 10 years ago probably, but it's still totally valid. Good, there's a bit of psychology in there, a bit of technique, and it's just this process. It's all about process. Forget the numbers. They look after themselves.
We have to wrap up really quickly now, but before we go, just wanted to get you to kind of give us an insight to what is coming up in your next session with us.
Where are we at now? Probably is that going to be number 6? Probably. I'm open to ideas. Actually, throw some ideas out there. But
yeah, trader friends, lots of you there with lots of questions. You know, Maturin talking about the benefit of a journal. Adam DeLuz talking a lot about also that book. He says a lot of senior traders recommend that book. Technicals. A lot of our trader friends here use technicals alongside whatever technique they're using.
Yeah.
You know, I would say that this really resonates with me because did you find that at the beginning of your journey, a lot of it is also capital preservation?
100%. Your primary job as a starting out trader is to preserve your capital. You have to be in the game. If you're not in the game, if you haven't got any capital, you're not in the game. So manage your risk. Put the stops in the right. We should do a session on where the stop should actually be placed.
That's a good one.
Not where your account can afford the stop to be. Where the stop should actually be per the chart. And if you can't afford it, you shouldn't be in the trade.
And on that note, we have to finish off there, but do join us next Thursday, where we will be answering all your questions to James Gordon and talking about how to preserve capital.
Planning to make investing your New Year's resolution? IG Invest brings their trading expertise to a brand new, simple and user-friendly app. With zero commission on US stocks, why wait? Download IG Invest today.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more, without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
Are you ambitious? A future leader? Do you think big and raise the bar? If that sounds familiar, IG wants you. We're a global fintech and we offer graduate schemes for the ambitious. You'll see everything as you rotate across the business, building your skills and knowledge as you go. Kickstart your career as a future leader at IG, the home of the ambitious.
Hey, trader friends, welcome to Trade Expectations with myself and Chris Beecham.
Good morning.
Raise a roof for Chris here. Good morning, everyone. Asking you, what is your week looking like after the week that we've had? I mean, we were talking about this last week, Chris, and it was like, still there was talk of, oh, when is the Fed potentially going to cut rates? And then now, after that CPI figure yesterday,
I'm still processing yesterday, to be honest with you, because if you'd said there's going to be a hot CPI reading, any normal response would be, okay, so the market will sell off, the dollar will strengthen.
yeah.
Now this was true for all of about 5 minutes.
Yes, and then it completely reversed.
And in our little Teams chat we have with a few of us who are trading, and a few of them are going, oh, finally this market's about to sell off. And then about 20 minutes later it was, oh no, back up again. And off it goes. There was a market sell-off. It lasted all of 20 minutes, and then the market rallied. Now it looks a little bit dicey today, but it's just, this.
Let's show everyone. That's like a brief reminder of what we saw yesterday. Let's whack up the screen.
Look at that daily chart. Look at that Nasdaq move. Is that my chart or your chart? That's my chart before I check. Okay. So yes, this is where we were yesterday. This is a 30-minute chart here, and I've got, obviously you can do this with the platform. You've got the daily chart on one side. You've got the 30-minute chart, whatever you want here. You can see this is obviously the CPI move right there. A half-hour drop. Okay, so I exaggerate. It was about half an hour of downside, and then we bottomed out. Admittedly, that was a nasty move, and I got caught by that. And then it's just, again, it's the elastic band. It got stretched and ping. Off we go again. Now, if this market, if you think what this market has had thrown at it since what 2-3 weeks ago, it feels like a month ago. You've had DeepSeek, you've had tariff
tantrum,
you've had payroll stronger. You had on Friday a payrolls followed by the Michigan coming with those inflation expectations, and then you had CPI stronger. And yet, where are we? Well, the Nasdaq's still about 500 points off record highs. Let me get to the S&P. Okay, we're about 60, 70 points off record highs, and it's looking a bit, it's struggling as we speak. But it's not coming off massively. This tape is so resilient.
It's so well supported.
Yeah.
And like I say, and you've heard me say this last month, you saw me saying this in the IG Outlook piece just before Christmas. You know, it feels like, you know, the fundamental things that we expect to rock markets have become unhinged.
Yeah.
You know?
don't seem to, all the old tunes don't seem to have their same appeal anymore.
It's marching to a different beat now.
Yeah, it is, really. And then you've got the DAX at record highs, you've got the FTSE at record highs, you've got Chinese stocks roaring back. It was a great headline in the FT yesterday about Chinese stocks entering a bull market, which is usually a sign of things getting a bit toppy in the short term, and maybe they are. But I think people are saying, well, why is it so resilient? Why are you still seeing the DAX making record highs on inflation data from the US, and of course the Ukraine, well, the Trump-Putin call yesterday, hopes for Ukraine deal, that's probably powering things in German markets, European markets, on the basis of some kind of peace deal, perhaps, and re-entering Russia. So there are reasons why, and of course, even at record highs, the DAX is cheap versus the US. The S&P trades at, 30 times earnings, something ridiculous. If you strip out the Mag 7, it's about 20 times earnings, but still expensive. The DAX still down at sort of 12, 13, 14 times. And this means people are just continuing to look for exposure outside the US. And that's really interesting, the fact that there's still this idea that maybe a lot of the expectations baked into the Mag 7 just can't be met. That doesn't mean they go down massively, but they just have to see leadership, and that's the problem with the US when there's such a big weighting, perhaps in the medium term of where they go from here.
Yeah, we've got we had trader friends earlier asking about this incoming election as well in Germany.
Yeah.
Do you see? I personally don't see it shaking the DAX too much because there's nothing new there. It's just, probably further stalemate to come.
Yeah, so we're expecting on the polling at the moment, I'm conscious, of course, Axel's much more of an expert at this than I am, but I was looking at the polling yesterday.
You're going to get Axel on this as well?
We're expecting a grand coalition of the left and right, if based on current polling, that the CDU won't be able to sort of take it outright, but they'll have to join with the SDP, so you get this grand coalition. So, of course, the DAX is a bit like the FTSE 100. We talk about it as a German index. It's not really, because most of the revenues come from outside Germany. So when we're looking at the DAX, we're not really looking at the index of the German economy. Now, having said that, if there are jitters about the German government post the election, what happens depends on how well the AfD do. There is maybe an excuse to say the DAX looks a bit toppy. I mean, you can see that there. You've got the price all the way up here, 22,400 or so. The 50-day moving averages all the way down here, about 1,800 points lower. So when you see this wide gap, say, between the price and the moving averages, it doesn't mean it has to close anytime soon, but it's just perhaps a warning sign that things are getting a little bit stretched. And just as the elastic bands worked yesterday, stretched the downside and then snap back again, maybe they get too far on the upside as well in the short term. So that's maybe the key thing to watch. But it's likely, I'm going to utter a dangerous phrase, but it's likely that dips will continue to be buying opportunities because of the strength of the German economy, or at least the strength of these companies that are getting their revenues outside Germany, and the fact they're still cheap. So I think people will be looking at the DAX. It probably is on my watch list to say, I'd quite like to be along the DAX, but just not at these levels. Really. You've got to wait for it, I think, to come back a bit, because it's just, clearly momentum is still with the buyers.
Yeah.
Where would you put your stop if you bought it now? Where would you have to put your stop? What, 1,500 points down from here?
Yeah.
That's the problem, really.
Yeah, and the problem is, this is like uncharted territory here. Bigger Beer is saying if you eliminate the DeepSeek and the government numbers, we're trading in a tight range. Something is going to happen, breakdown or new high soon. Participation on dips is getting lighter.
Yeah. And also look at asset managers. They're very heavily long US, and they've been sort of cutting back on exposure. The last time we did see anything meaningful like that was the end of 2021, early 2022. I'm not suggesting there's a repeat of that on the cards, but that's the kind of thing. People are already long US markets, and that's why you're seeing others take it on. I liked his comment that either it go down or there'll be new highs. So either it goes up or it goes down. So that's sitting on the fence, really. But it's true.
Like an economist, Chris.
I know. Well, search for the one-handed economist. You're on the one hand this and on the other hand that. If you put 12 economists in a room, you get 13 opinions, as they say.
I hope Richard's girlfriend is watching this. She's an economist, Rahel. But isn't there the saying, like, an economist has to be wrong only a number of times before they become right again?
Yes, exactly. A stop clock is right.
Speaking of this, the AAII sentiment survey shows, if you want to whack up this right now, that a record number of investors are bearish. Shout out to Patrick there who shared this with us. You know, we are seeing things starting to change, but I am bewildered as well because it's, you know, not as much as I would expect.
No. So this is interesting, the fact that people are still bullish and still prepared to sort of go with the trend. And if, of course, if you do strip out things like the Fed, and there is a lot of noise, maybe, but if you look at the underlying health of the US economy, of course, and we've been saying this, it's like a broken record because it's still been true for a long time. Yes, you had news that Chevron last night was cutting a fifth of its global workforce, but overall, the figures, as the payrolls data shows, is still very, very strong. If you strip out, and I don't mean to be one of those people that says if you take out X, Y, and Z, you get the number you want, but if you strip out shelter from yesterday's CPI figures, the truer figure, the real figure is closer to maybe 2%. Now, it's not an argument to cut rates, but nor is that an argument to hike rates. So, and if you remember back to 2024 and 23, January of those years, both saw surges in inflation, and then it weakened into the second half of the year. So there's kind of this thinking that, okay, we have to look through this, in that famous central banker phrase, look through the data you don't like to find the stuff you do like. And then you suddenly get a reason perhaps why the market had a brief freak out about yesterday's inflation and then suddenly appeared to regain its composure so quickly.
Shall I be controversial?
Yes. When has it ever stopped you before?
True. This is not my view, but just I was chatting with quite a few Natixis and all ING people.
Is that because you met the Natixis people in the lift downstairs?
No. It's actually from my past life, and for my sins, I still keep in touch with all these people because it's a really a good laugh, if anything. And Williams de Bro as well, but I think they've now changed their name, haven't they?
Yeah.
Yeah, another one that's changed their name. And I also hang out, like after this, I'm going to meet some ex-mates from LSEG for lunch, which is quite nice.
But enough
I love
of your
this
diary.
area. Yes, so I have a full diary, and what is more fascinating than anything else is kind of like, you know, the different thought processes, right? Because every house has a different thought process. And this view was one that was shared during that Williams de Bro, now ex-Williams de Bro, conversation. And there's this, no one can find the data, but there is a sense that maybe the reason why markets have become unhinged with fundamentals is because, you know, during COVID, lots of people were stuck at home and then they did all this trading and everything. Or some others decided after lockdown, they would just live life to the fullest and not look so much at trading and investing. They're trying to figure out whether or not this has changed the ebb and flow of markets that they were used to, is in short.
Okay.
But no one can get the data.
Okay, so it's just a hunch at this point.
Yes, it's a hunch.
The plural of anecdote is not data, as they say.
But they can't find the data.
Okay.
Which is really annoying,
Where do we go from here with that? Okay. I understand the point that COVID was a very different cycle. And I think, again, with inflation, you get these charts you see floating around that say it's going to be like the 1970s. You'll get a second massive wave of inflation, and that will unhinge everything. Maybe not. Maybe it's the fact that you shut down the global economy and then reopened it, so you did get this sort of pass-through inflation. You remember those stories about all those tankers and ships sitting off LA because they couldn't get in? And the inflation just has to feed through the economy. So to be fair to Powell and the central bankers, inflation was transitory, just not quite as transitory as we'd hoped. But maybe we're still, again, living through the working out of
we
this
certainly
cycle.
are in the airline and travel sector.
Yeah, so maybe there's no law that says the US has to come off massively because it trades at 27 times earnings. It looks expensive, but if it's backed up enough by data, then certainly maybe there's room for further upside. And the fact that you get this skepticism about the Mag 7 and US stocks is quite comforting to me as a person that thinks it will keep going higher. Because if everyone's suddenly saying, no, you must buy the US, don't care about valuations, then that would be a worrying sign. But the fact people still say, oh, maybe you need to be concerned about valuations at 27 times earnings, that's quite a nice sort of sentiment sign, really, that people haven't gone to irrational exuberance. This is the kind of thing that probably triggers Rich as we are speaking, because it will drive him nuts.
He's probably coming on highs.
Yeah, he's probably beating the door down as we speak. But we are where we are, and the tape is so resilient in the US. It's taken these knocks maybe if we look at the
He
Dow,
mocks my 75% US stock.
yeah, exactly. But then there's 70% of global market cap anyway. So where are you going to go? But if you look at the Dow, look at this on this chart, and the Dow with going up to 45,000, we're sort of in the middle of that. Really, that's consolidation. Now it might be consolidation. If I go to one screen, it might be easy to see really, but we were record highs just 2 weeks ago. Maybe this just goes sideways for a while, and then maybe it goes up again. And it's an interesting piece I read yesterday about tariffs, because this is the thing that really people kind of hang their hats on. Tariffs will be inflationary. It's bad for the global economy. I can see the logic of that. But people were saying yesterday that he has to get these tariffs through Congress. You had Mitch McConnell, the head of the Republican Senate, the Republicans in the Senate yesterday saying, something because he's senator for Kentucky, it was a local opinion piece. He didn't think tariffs were a good idea. And if the push for these tariffs runs into opposition in Congress and they don't come through, and even if he gets the emergency ones through for a while, they take time to implement. So if we're not looking at tariffs immediately, then the market is arguably priced.
If anything, maybe like from
exuberant relief rally, you see.
Yes, from the middle of the year onwards. I mean, that's, I think, if he announces any more, for those to take place, it'll probably be like from middle of the year onwards.
Perhaps, yeah. And if Republicans, and they talk about the fact that, oh yes, he controls Congress, he controls the Senate, so he can do what he likes, but they still have a constituency to answer to. And if the senators and the congressmen start feeling the pressure, then this will echo back to the White House. You might get opposition from Congress to global tariffs. There are potentials either way, as ever, in markets.
Speaking of markets and data points, we've got the PPI.
Yes.
Okay, well, the expectation at the moment is that it likely rose 0.3%. After a 0.2% rise in the prior month. I'm looking at the core, wondering if we're going to see another hotter than expected core PPI.
If you can bring up this chart as well, I've got on my screen from the great Ed Yardini. But with PPI, it's not the data point that's likely to get the most excitement. You can hear people dropping off when you mention PPI. But this is sort of what they call producer price inflation or factory gate inflation. Last month it came out before CPI, which is probably the best way to do it, but usually it comes out after CPI. But people are saying now maybe CPI is less important, and if you look at PPI, you might be starting to see signs of people front-running the tariff increases. So that's the potential thing to watch for in today's numbers and see how we go from that. And certainly you have seen a rise in import price index, particularly for Chinese goods. So this is the thing to watch maybe in today's numbers. Maybe if we get a stronger PPI, the market sells off on that instead, and we'll see what happens. You have to keep an open mind with this, I think.
It's funny how we're now in this space where numbers that previously were sort of regarded as B-list is now like A-list, right?
The focus shifts, doesn't it? It used to be, I think in the 90s, the trade balance in the US was the number of the month, and then nobody cared about NFPs. And then suddenly, post-financial crisis, it was NFPs. They've never really reattained their rock star status, it has to be said. And now it's CPI. Maybe the wagon moves on to PPI now. I don't know. It's just...
We've also got, along with that PPI number, we've got the, as I said earlier, also this one is considered more like B-list. Of course, we had that big jobs number last Friday already, but we've got the weekly jobless claims report out later today. Initial claims for unemployment benefits seen falling by 4,000 to 215,000. For me, the interesting thing in this space is the fact that civil servants, tens of thousands, are cleared to take this buyout.
Oh yeah, we talked about this last week, didn't we?
From Trump's administration. I spoke to my cousins in the US, and they did confirm that there was strong, not demand if you like, but uptake of this. But they did also quantify, because I was very surprised that something like 75,000 workers have signed up for the buyout. That, is not a small number. That's 3% of the civilian workforce. But my cousin said, well, they were hoping for 4 times that amount.
Yeah, so there'll be maybe forced layoffs coming. So that's the key thing to worry about. But is this, not to be sort of Panglossian about this and everything's a good piece of data, whatever happens. But if people are happy enough to do that, that probably shows the underlying again, I said this probably last week, is the strength of the economy if you're happy to move
Caleb,
jobs.
do you want to show the chart whilst, there you go.
So there we go. If they're happy to move on, then they're confident perhaps they can find something else. So there's a really interesting point, I think, there particularly. So
Apparently, all they needed to do was to type resign in the title of the email.
Yeah.
And send it to the relevant
Well,
department.
this is the new anti-bureaucracy in action, isn't it? Just one word. Stuff you go. No mucking around, no long letters.
Apparently at Bloomberg, there was a function called Quit Go, Q-U-I-T, but no one ever dared to type it
Knowing
in.
Bloomberg, it probably sent your chair through the floor or through the roof. Maybe it just
Immediate.
catapults you like
Faster
an
than
ejector
being
seat. Yeah.
frog marched out.
Yeah.
Because back in the day, it was like if you did resign,
You were gone.
the company was so
Did they drum you out in the newsroom?
affronted by it.
How dare you leave paradise?
Yes, that you would be frog marched out in case you took anything with you or whatever. But, you know,
I always get that with the vibe of going to Bloomberg. They just like their workers never to leave the building. If you could help it. Do they have dry cleaning on site and stuff? All this.
they had a doctor on site, they had a nurse on site, which actually was very useful for me because after I joined Bloomberg, I still cycled to try and keep fit. Unfortunately, like Aaron Bright, I fell off my bike in Epping Forest. Terribly. We think it was the same spot,
Travel
actually.
advice.
Very
Never go to
dangerous.
Epping
Do not
Forest.
cycle in Epping Forest. Please, spare yourself that misery. I effectively took off all the skin near my arm. But by typing nurse go or... No, it is nurse go. I'm serious. Unless they changed
Everything
it.
is something go in Bloomberg,
Yeah,
isn't it? if you
something
want
go.
it?
It's a function. It's just enter buttons.
Can
Go.
you do alcohol go or gin go? Does that work?
No. No, I'm scouring my memory for all the functions, but no, there wasn't that. But they changed the dressing on site and it was a doctor and a nurse. So it meant that I didn't have to go to, you know, a hospital.
No interruption to service.
And it was back in the time when not only was there free food, but also the free medication dispensed in all toilets. Take as much as you want because they want you to continue working. But back to this, also, what I find unbelievable is the fact that 75,000 people are able to do this. And I said to my cousins, don't they have to work? Like, don't they have to pay bills and stuff?
They get severance, don't they? Do they get...
They get severance, but I can't imagine it's going to be such a huge amount. You know, it's not like getting severance and you work for a quant or a hedge fund, right?
Oh, yeah. But I suppose you have to allow for people to make irrational decisions. That's the whole problem with economics, isn't it? It's
Or
based on the idea
is-
that human beings are rational.
Or, I was trying to think about this logically, or is the labour market so strong that it can absorb? They're all kind of like,
Well, you
well,
see, your mistake is to think about things logically when markets refuse to be logical, as we saw yesterday.
they do refuse to be logical, I agree, at the moment. And this comes, you know, at a point where Chevron's just laid off 20% of global workforce. You know, JP Morgan Chase is planning to begin its already announced layoffs for 2025.
It's remarkable, really. But then, I suppose if the Fed... let's go back to the Fed and what they might do. So December apparently is now the price for the next cut, which is an awfully long way away. Hikes still don't seem to be talked about in any meaningful way. Powell was very sanguine yesterday about inflation, saying it's still making progress, just maybe not as fast as we'd like. But what would really cause them to think about hiking would be a sustained surge in employment and indeed wages. I think for the moment they'll live with this slightly hotter CPI figure and not overreact to it. I think for the moment they just want to keep focused on the labour market. And so for the time being, the case for holding is still very, very strong. The case for hiking isn't there yet, I think, and that's continuing to be the case, which is why arguably stocks continue to hold up relatively well, all things considered.
Let's really quickly, we're being told it was wrap soon, but let's quickly punch up the CME FedWatch tool here. Chris, because I know we have to get you off quite soon, but yes, it is holding at the moment, but let's have a look further out.
Yeah, still it's, again, Fed meetings aren't quite as exciting as they were now because I think the hold is kind of baked in for the time being. So it'll, again, we just have to keep doing what we're doing for the past, 3 years, monitoring inflation, monitoring jobs data, and we'll have to see where we go. At the moment, it's still, I think, still on hike and wait and see.
Yeah.
Sorry, hold and wait and see.
Hold.
Sorry to panic everybody there. Same difference.
And JP's will keep an eye. We'll wait and see and keep an eye on the data.
Yes.
And on that note, everyone have a great Thursday. We will see you here on Friday. We're almost there, almost at the weekend. Can almost smell it now. But whatever you're doing today, may it be optimized. And thanks for watching.
Inflation skyrockets, but stocks shrug it off. It is Wednesday, February 12th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan, here to take you through the next hour as we wrap up the futures trading day. If you're on the platform, if you're on the website, come over to YouTube. Tell us what you are trading, what you think of this turnaround Wednesday. Otherwise, if you're already on the YouTube, as the kids call it, come over to the website and the platform, see what we're all about. Guys, we had the CPI report this morning, 8:30 a.m. Eastern, 7:30 a.m. Central Time, and those numbers came in hot. Headline inflation, 0.5% on the month over the month, year over year, bumping up back to a 3 handle. Core inflation back up to 3.3%. Yikes! Even supercore is up by 0.7%. All seemingly moving in the wrong direction. And then a funny thing on the way to the forum happened. We see that the market stops selling off immediately after the data and then spends the rest of the day clawing back. The NASDAQ here is actually in positive territory in the day, up by 0.03%. Ilya, help me make sense of this. Fed rate cut odds were cut down by a cut today, and yet equities are saying that, why should we be worried or not worried?
Lest you get excited that what this means is equity market resilience. Take a look at the dollar and find that it is weaker. If this was the kind of report that said, oh, goody, this is the good kind of inflation, the economy is accelerating, more earnings, more cowbell. No. When you look under the surface of these numbers, they are not good at all for the growth side of the equation. The reason we end up with these hotter than expected numbers is actually all the wrong reasons when you consider the economic growth perspective. The core services part of the mix, which is, of course, where all of the growth is, where all of the employment is, and where all of the inflation has been stuck since everything else disinflated now over a year ago to essentially nothing. That actually declined. In fact, we had the smallest contribution to overall inflation from core services since the first few months of 2022. This is not a good sign for growth. So how did we end up with these hot numbers? Well, the goods side of the equation became less negative because there's some natural statistical churn there. We went from a negative 10 basis points to a negative 3 basis points of contribution to overall CPI. But the real story, as you and I were talking about offline, Chris, was the energy side of things. And that's when you look at headline. Now, of course, core surprised higher also. So that's not necessarily energy per se. That excludes it at the top. But this was, even in its extension to energy services and sort of related things like insurance, this was a story about higher costs of energy becoming a positive contributor versus a negative contributor in December. In December, energy shaved off 4 basis points from overall inflation. Now it's added 6. That's quite a swing from one to the other report. And that's how we end up with these hot numbers. It's goods and energy becoming less negative in the calculation, but the actual growth part of the story is by no means encouraging. And that's why you don't get the kind of response from the US dollar for the most part that sticks. it ends up down against the euro on the day, down or flat against, in fact, most of its major counterparts, save for the yen, where it's just a pure yield story and the yen does what the bond market does. If stocks were in fact inspired by growth here, we'd be rallying. We're not. We end the day basically unched on the big indexes. Certainly off the lows, because if you were concerned that the Fed was going to have a head change entirely, well, that concern is plainly not here. And that's why you come off the lows. I do get the sense that maybe 25 basis points, which is all that we're baked in to cut now, is maybe the end of the line. Because to go from 25 to 0 is a big head change for the Fed, and they're not going to have room to telegraph anything like that for quite a while. They just walked through this exercise of Powell's testimony where he was gradualist and attempting to tamp down any expectations for any action anytime soon. And the next time they meet is March. So it seems like maybe the move in bonds relative to everything else looks overdone. Maybe the move in yen relative to everything else looks overdone. But this is not the kind of report that tells the Fed you can't cut at all. And it's certainly not the kind of report that says the U.S. economy is showing signs of strength. The internals here show quite the opposite.
Dylan, it feels like this is another day where we had a big binary event risk. And it's another day where the market absorbed the body blow, right? We get that hot inflation number, and that's a number if it came out in 2022. Inflation's accelerating, core month over month higher for the 7th month in a row. Fed doesn't have its hands on the steering wheel. Have we just deluded ourselves into buying every dip here? Doesn't matter if it's good news or bad news. Is that what we're working through right now, where we're kind of immune to anything that doesn't confirm a bias to the upside?
I mean, it feels like it, right? I mean, I obviously don't have an answer to that question. I would have expected, I mean, and this is why this validates Sosnoff's longstanding point, which is I tell you the number, I tell you whatever the CPI number, the Fed decision, before it comes out. Like if you told me we're going to have a hot, or even some would say quite hot inflation reading, that the NASDAQ would not be unched to slightly higher, that equities would sell off substantially. I won't get into the nitty gritty of it.
I mean, they did. So, they just didn't hold it.
Yeah, but again.
Yeah.
So yeah. Which means, but again, if you're not watching every tick of the day, if you're just a person and you're like, oh, how was the number? You're like, oh, inflation was a bit, hot, and then you look at the close and you're like, oh, it got kicked in the teeth for 2 hours, and came back.
Yeah, and I mean the price action validates exactly what you're saying, that most people, were you to have given them the number, would have said this is bad for stocks. That was their knee-jerk reaction, clearly. So most people were of that view, and then on reflection were clearly shown otherwise. I just have a hard time thinking this is good news for stocks, that they've shrugged this off, because it doesn't look like the kind of set of numbers that's at all growth encouraging. And I think you're absolutely right, Chris. Were this 2022, it would be a very different story. But we're in a very different place in the Fed cycle now. And
but what place is that?
Yes. That's, I think, the key difference. Because we got a report like this on February 13th last year. I have that with this vertical line here on the chart. That's when last year's inflation data came in much warmer than expected. And did I take this down for some reason? I don't know why I did that. And I don't even know if I have the one for the overtime slide. So we're just going to use the slides from Futures Power Hour today. But I think this is the tell here. Okay. In our super core inflation reading, the biggest contribution is this transportation services. Ilya, you point out that we're going through a rebasing period here. And then we have this other source as well. Last year, the January report was like half the inflation was from transportation services and other. So when you look through the numbers, and I think about what happened last January with the CPI data, I say, okay, well, last January was super hot, right, for that report. I remember the market selling off right before Valentine's Day, and then it was bam, the market was bought back up immediately thereafter. While we bounced around for the next week, we ultimately resolved to the upside right now. And that was the case for all of those reports really at the start of the year, where you'd get a bad CPI reaction and then the market bounces up, because you have that dynamic where, okay, inflation's missing and it's running hot, but the Fed is still going to ease. So what's the best hedge against inflation?
Well, and growth was accelerating.
And growth
Let's
is
remember,
accelerating,
the
so
beginning
you
of
wanna be long
2024 was a period of accelerating growth. That was the Fed going, hey, maybe we need only one cut. This economy is strong, yada, yada, yada.
Yeah, if this is following last year's template, it's not a surprise that maybe we front run then the reversal today. But it also probably means that we're going to have a few days of digestion here before we make up our mind about whether or not we're actually comfortable with it. We like it, we hate it. Of course, maybe we're going back into the hole. It's another weekend coming up, Fridays in 2 days. And we've seen the last few weeks that the market has de-risked on Friday afternoon. Right, Ilya, you and I go on Futures Power Hour, stocks start selling off. And then they sell off until the futures open, and they're either down for a few days or a few hours or a few minutes, but then ultimately the gap is closed. Maybe that's what's going to happen here again this weekend. But the S&P, the NASDAQ, they both show that great resiliency today. The data itself, to say that this was a surprise, 73 economists polled by Bloomberg News, not a single one thought inflation would be this high. So it is a curveball for the day. And while stocks rebound, our beloved bonds and notes just get taken out to the woodshed here, in part because those Fed cut odds just get absolutely slapped around. SR3, Z5, their year-end 2025 rates, we are now going back to our lowest point that we were on a closing basis since January. And in the Z6 odds, we are now going back to a place where there's still one cut priced in for next year, through the end of next year, but we're beginning to slip to where, as you point out, Ilya, we may be looking at one more cut in the cycle again. So I suppose the question is, at 4.6%, is our long notes, long bonds idea done right now? Because this is not what you'd want to see. Well, obviously not. It's not what I want to see. I'm watching money go out the door again in bonds. But this is a technical breakdown that fails. We have now since reversed into the uptrend. What does that say to you technically, Ilya?
So I got out of my my TLT calls when we got a little bit of a reprieve off the lows today, and that's fine. The trade made money, and I ended up giving away maybe about 50% of the P&L from the high last week. This price action says that if you thought this was a head and shoulders or some sort of other sort of analog pattern, that's not what this is. And so I thought the price action merited taking my remaining winnings and sitting down. But I am looking to get back long before much time elapses here, because I think once you get to that 25 basis point threshold, and there's no time for the Fed to methodically unspool the idea that they're biased to cutting, that's probably the end of the road. This is probably the last big downtick in the bonds. We get, at least for the immediate term, we get PPI tomorrow. There could be a shock there because, again, to your point, Chris, a lot of this was transportation. And again, let's really hammer this home. This rhymes very ominously with the University of Michigan consumer confidence data, which went down because inflation expectations surged. It rhymes very ominously with the ISM and S&P Global Service Sector PMI numbers from last week, which showed us the weakest growth in a year. This report told us that the reason inflation was hot was because energy and because front running of tariffs, most likely, or at least that's what the surge in the University of Michigan's inflation gauge told us. Respondents there said, we're taking inflation back to over 4% in a year, and the reason that we're doing it is we're concerned about the impact of tariffs. Meanwhile, the one part of the economy that's been growing healthily is a downdraft on inflation in this report, which echoes those weak ISMs and those weak S&P global numbers, which tells you that you are looking at, certainly not stagflation, but you're looking at the kind of risk where growth is weaker and inflation is high for the wrong reasons.
This is
perhaps why stocks aren't rallying on this. They've managed to shrug off the initial, oh my God, the Fed won't cut sort of knee jerk, because obviously that's not what these numbers say. But from a growth perspective, this does not look good at all.
That is a difference if growth is increasing or decreasing in real terms, right? So if inflation's warmer, but the trade-off is like we're getting plus 5% growth in exchange for 3% CPI, but it's like, well, if we had 2.5% CPI, we'd only have 3% headline GDP. Like, would you take real GDP of 0.5%, or would you take real GDP of 2%? You'll take real GDP of 2%
all day long,
any day of the week, all day long, right? But a world in which growth is decelerating while inflation pressures are rising, that does speak to the modeling that the Fed has done. We talked about this after the China, Mexico, Canada tariffs, where if you to assume, given what happened in 2018, the impact would be somewhere in the neighborhood of a 1.2% decrease in GDP over the course of a year and a 0.7% increase in inflation, which if you add that up from where we are right now, it basically means GDP comes down from 2.5% or so into the ones, and inflation bumps up from the mid to high twos area into the mid to high threes. And all of a sudden, you're talking about real GDP that's now, 1% and change as opposed to being 2 or 3%. And that's has obvious implications for income. But Ilya, you're
huge
talking
implications
about
also for the world economy, considering this is weakness in the U.S. service sector, which is the only part of the global economy that's really growing.
Right. And you mentioned energy was particularly in focus today in the report. But Dylan, it was the comments about Russia that drew and piqued my interest. I'm sure that many people saw that Trump truthed or tweeted or whatever we call it these days about this. Posted, I guess is they're not just calling it on Twitter or on X, that there could be a conversation about negotiating a settlement to end the war. Oil prices here react quite negatively to that today. We see here that it's not the CPI report on our 5-minute chart that ultimately knocks down the market. 9 o'clock is when, 8:30 here. Oil doesn't care. We see here that 9 o'clock rolls around, and then the Trump report right at noon that this conversation has occurred, and oil trends lower for the rest of the session, excuse me. Dylan, what's your purview on this Russia-U.S. On treaty where Putin and Trump are planning on visiting each other's nations?
Well, I think that one, this was sort of, foreshadowed and not unexpected. One, two, obviously it's bad for oil prices. Three, I think it becomes interesting we've talked about around this. I'd like to see the other charts. Maybe not great for India because India stops being able to stops being able to exploit the situation. Maybe good for Dubai because they become the home of capital flight if capital restrictions on Russian money get lifted in Europe and they don't want to bring it back to Moscow. Dubai is becomes the ultimate third party safe haven for Russian money. And I guess is this what's the who knows? I don't know whether it's tick for tick, but obviously it's going in that direction. So I would say it's India negative, it's Dubai positive, it's probably Istanbul positive. I don't know if Turkey is worth financial attention at this point, but I
don't think Turkey would be an intermediary that would benefit from all this, right? We just saw how Turkey moved on Bashar al-Assad. in Syria. Russia's probably not too happy about that.
Just culturally, Istanbul is the closest to Moscow and is decades of just being it's like the Miami Beach of New York. So if you're in Moscow and you want to set up somewhere in the south, so to speak, and you don't want to go to Dubai, which is a longer haul, Istanbul is your only other choice. And it became the location of record, during the war. With that said, I don't disagree with what you're saying, which is they're a less reliable partner than Dubai, which is Dubai is a city built on finance. Istanbul is a city built on its culture, which is not the same as being built as a banking capital. Dubai is built as a banking capital, and it is surely a more politically reliable location.
Well, and I increasingly, from all angles, the scuttlebutt essentially is that Dubai is today what Hong Kong was 10, 15 years ago. Sort of, if you want to go to where the hot money flows free and there's lots of stuff to do, and the overarching lens through which people look at is how can we help you to make money today, and there's a kind of influx of expats and safety and all these things, Dubai starts looking a lot like Hong Kong circa 2010.
Does that mean that China's going to take over Dubai in a few years?
It means that the China takeover of Hong Kong is another thing that's been supportive of Dubai's boom, and this deal is great for them.
And teaches Saudi an important lesson about taking things over.
You can just do it, apparently. Yeah, like the Trump comment yesterday with Gaza, like how much are you going to pay for Gaza? He's like, we're not paying for Gaza, we're just taking it. The geopolitics is really the fascinating aspect of this, because if there is some sort of resolution, these two poly markets I've been watching, obviously this isn't a representative sample, yada, 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 no American traders. But the odds that Trump ends the Ukraine war in the first 90 days, a few weeks ago was trading at 18 cents back on February 2nd, and those odds are now up to 36%. The slightly variation of that market will be a ceasefire before July. Those odds again have risen from about 36 cents, 35 cents or so back at the start of the month to now over 50. That tells me one of two things. Like, there's clearly, if you're following the news flow, if you're looking at the conversations, heck, the prisoner exchange last night, right? The conversation that's revealed public today, they're clear on treaties. Whether you like it or not, this is the direction things are going. So the question is, if we're only priced in, say, a 30-odd% chance for a ceasefire in the first 90 days and a 50-odd% chance that we're going to get a ceasefire by July, that means the market is not fully priced. That's not to say that we should be buying those and saying, oh, the war is definitely going to end. But it means, were it to end, there is going to be capital moving around, right? When we get to an 80% likelihood that a ceasefire is going to be arranged, the money is going to have been moving to where it should be. So the question is, where should the money be going, guys, if this war ends? Is this the end of oil, right? Does this mean with Russian supply coming back onto the market, OPEC Plus is going to be facing more difficulties about expanding supply? And in turn, as Trump continues to push forward his drill baby drill agenda, does this increase the probabilistic scenario that we're going to be looking at an oversupply in the market sticking around for longer, right? Does it mean maybe a collapse of OPEC Plus altogether? That's certainly something possible. What if the US and Saudi Arabia and Russia decided to do a pact themselves? The rest of the world is on their own. But the end of the war, and given the relationship and the people involved in pulling the levers right now, means that there's going to be a great deal of capital dislocation soon, just like there was at the start of the war. And I think that perhaps provides, we have the AI story, one, in the background. Obviously, that's going to continue to be there. But two, I question whether or not if we should be treating it like an unwind of what happened in December, January, February of 21, 22. It feels more complicated than that, Dylan. Like, we can't just reverse engineer what we did back then and play the opposite side. I'm not going to go long tech stocks and short oil this time, although maybe that is a good idea.
Yeah, why aren't you going to do that?
Well, doesn't that seem... Well, that was the play back then. Be an oil man, get short Kathy Wood. That made my year. So
and now get short, and basically you could. I mean, the real situation would be if you get the Hamas hostage release this weekend, oil's going lower. I mean, that's a big if. I understand.
Well, actually, one interesting thing about all of this, and one reason, so I got out of my oil short, as we talked about yesterday. Obviously, it would have been better, but by a fraction to wait. But I don't think it doesn't. I don't think it matters terribly. And now that we're approaching the previous swing bottom, I'm actually a bit hesitant to be a seller on these headlines, because the entire story that we were so successfully trading last year was that neither the Russia-Ukraine theater nor the Israel-Iran, Hamas and company theater really manifests as actual disruption of crude deliveries. That the geopolitical risk, when it pops up, is a thing to sell. So now that that geopolitical risk is going away structurally, it doesn't really make sense that there should be another big removal of a risk uplift in the price of crude, since everything we've been doing sort of speaks to the idea that it wasn't really there, that it was incremental panic. Instead, the influence might well be that the ending of hostilities, in particular in the Russia-Ukraine theater, means China has to now buy oil on the open market again. And they're the largest buyer in the world. You get that
China
demand.
and India were the two winners in the whole situation.
That's right.
They'll be the losers coming out of this. In terms of oil, I don't lose generally, but in terms of cheap oil, they'll be the losers.
Well, right. But even more dramatically, if you see their demand now start to show up in market rates, because as opposed to buying off market on the low from Russia at steep discount, they have to buy through the usual SWIFT-based US dollar channels. Well, that's going to probably look like the demand for oil picture is not what is priced in currently, because what is priced in currently doesn't really account for their flows actually. Surely it anticipates it to some extent. Markets unpick these things, they find proxies, they adjust, but now we'll see it for real. And what it might actually do is lift the price of oil, of all things, while the markets kind of rebalance and readjust to what the real supply and demand, let's call it equilibrium for lack of a better term, kind of a level is. Obviously, this is something that's always in motion, but there might be a different floor on this once China is visible and India is visible in the price as an open benchmark.
Dylan, one of these theses that we've been kicking around since the election was that if the Russian war ended, right, if the Russian war ended, then money centers would become greater outlets for capital flows, while the intermediaries that process the commodities would suffer. We talk about how UAE would do well in that scenario and India would do poorly. Since then, since the morning after the election, the UAE ETF has outperformed the India ETF 27.65%. It's been a very strong run. India is now at a fresh closing low for the year, and it is now the lowest close that we have seen going back to the end of last January here in this market. So Indian equity is really being punished right now. It's not just a function of a strong dollar, although that's certainly hurting. The Indian rupee has been getting hit pretty hard, particularly in those Asian hours in recent weeks. But it's also a fact that they may be losing a major pipeline of business that has kept their economy, churning for the past 2+ now almost 3 years here. So Dylan, I think it's worth continuing to watch. Also, what does that mean for something like gold? I don't know. Probably that Russians are going to be buying more gold. China's buying more gold. They're changing their rules to allow insurance companies to buy more gold. Right now, for the big three COMEX vaults here in the United States, there's more gold in Manhattan right now than there has ever been before in American history. The gold being stored in COMEX vaults has surged to its highest level, just eclipsed the COVID peak. Who on earth is stockpiling all this gold, and for what reason? Why are we doing that? That's a good question. Maybe we're doing a Die Hard 3 type of thing. I don't know. But there's a lot of demand for precious metals out there right now. As this war looks like it's coming to an end, it's going to be something that we have to follow here, obviously moving forward. But adjacent to the war ending, Dylan, we of course have negotiations with the White House. You mentioned yesterday that you were looking along the shares.
Tesla buyer. Mm-hmm.
Yes, of the president's top advisor, Elon Musk. Today, he announced that he will be sticking around in Doge for at least 4 more months. When that news came out, Tesla share prices dropped from where they were trading roughly $345 and change, now down to where we are in the after hours, $336. Is this the purest reaction, purest evidence that we have that the market thinks that Elon Musk's time is divided, and quite frankly, the best thing that we can look forward to once we get a sense of when he's going to be leaving Tesla? Should we just be buying calls on the other side of when his expected exit from Doge?
It's a good idea.
Excuse me.
You're just to run it out. I mean, the only reason that's probably that's obviously fraught with risk is, time commitments are changeable, and so what was said today doesn't mean that it happens tomorrow, as we all know. But that was a great linear illustration of the market's preference to have him not in Washington, or at least of the Tesla shareholders' preference to not have him in Washington, in the most literal expression thereof. I mean, it's a different kind of madman's delight, because you're basically banking on the fact that there's not going to be a calendar change. So you're buying calls, whatever, for June 1st or something, or July 1st, on the belief that, that the second half of the year that Musk is out of there. And that he's saying some.
Yeah, we could play it as a calendar call spread, right? Like we're short the front dated months, and we're long the calls further out, right? Like if he's going to be sticking around in the short term, the market clearly is assigning a discount to Tesla share prices with that news emerging. So maybe this is an albatross for a little bit of time here in the very short term. And then in turn, when his exit from Doge does come, then the markets his attention will be back on the things that we as shareholders care about, which is making us money. The shares can be rewarded.
I mean, is it not surprising that what he said was only 4 months? I mean, do we not have a 2-year window in which they're supposed to prepare this Doge report and identify the savings that they're going to identify? Is it not a bit strange that we're saying, oh, well, he's just going to be there for a few months and then he's gone? And of course, Vivek is already been made gone. Who's running this thing, and is anybody, and what's it going to do in 4 months for the remaining year and a half?
No idea.
Aren't they supposed to be running it?
Dylan?
No. I mean, I don't want to change. I was going to change the topic, and it was inappropriate. I'll do it in a little. We have time enough that I can come back to my primary issue. I don't. Who knows the future of Doge? To answer your question, Ilya, I mean, I think that. His thesis is that he can institute a system that then once he institutes the system, that the system can be managed by other people. We'll see. I think that I like owning Tesla, full stop.
The odds of Elon Musk leaving Doge before the end of July in Polymarket have increased from 16 to 20% over the course of the day. So Dylan, I think you have a good point there that there could be some task that he finds to justify sticking around for a little while longer. There may be a way to structure a trade there, right? obviously, I'm paying attention to this via XLY. Tesla's about 15% of that particular ETF, so its bounce today was nice, but there's still a lot of damage here. And you're starting to see XLY fall apart, which is problematic. You go over to XLF, on the other hand, it's off the highs, but recovering a bit. You can go to industrials, so that's not looking fantastic. The cornerstones of the sector rotation, it's a little sloppier than it was a week or two ago, where it's not consistently clear across the board. Home builders today of interest, they underperform basically everything except the Russell here. With tariffs, Trump says this afternoon reciprocal tariffs could be coming down the pipeline. With tariffs and the Fed potentially needing to stick around with higher rates, how is housing affordability going to get solved in this country if we're not going to build anything?
I don't believe it will be solved. I think the answer is it doesn't get solved. That you end up with, I think America is rapidly, and everybody knows this is just becoming like a legacy European nation with an overclass that owns the landlord class and the renter class. And you're either born to a family that owns real estate or you're not. And that's it.
And by the way,
slightly less
this was no, I don't. This was the order of the day for most of human history.
Thank you, Ilya.
What's really changed things is the incredible 40 years of perpetually declining inflation and declining interest rates that has enabled a lot more people to take out loans to buy real estate from about the late 80s, early 90s through to the COVID pandemic. And this was always going to be a thing to some extent because, of course, the demographics of the situation are such that the baby boomers are exiting. There's not as big of a generation behind them. And so everything is changing. Labor markets are changing. Everything is changing unless we decide that we're going to build more in earnest. And that may be coming. Might be one of the only things that the two sides of the political spectrum agree on. As a matter of fact, that we need to build more stuff. Let's see it. Because right now, the share of inventory of overall single family homes that's new houses is only about 1 out of 4. Almost all the inventory is existing inventory, and rates need to come down to unlock it. As we've talked about a lot here, the rate hike cycle in 2022 essentially took both buyers and sellers out of the market. If you're selling, why would you sell? You've locked in a mortgage at what, 3.8, 3.6 on average, and you're gonna refi it at twice that? No.
No, we keep getting pieces of mail like, have you thought about refinancing your mortgage? Absolutely not.
Absolutely not.
No. Not at these rates.
Save the trees. Don't send me this nonsense until we're at best at a 5 handle.
Yeah. Builders here, they face a problem where if we're looking down the tariffs and we don't have the reforms, the margins that are being eaten into begin to weigh heavily because it's that or they pass on the cost of the consumer.
Yeah.
Fannie Mae put out a report a few weeks ago. If you want to get housing affordability, forget back to where it was when we were all young whippersnappers, Dylan. But back in the day, like, say 2019, pre-pandemic. The good old days of 2019. What a world.
I enjoyed that year. I think I went to Hong Kong in 2019.
Yeah,
it was when Hong Kong was a free and prosperous state.
Oh, what a beautiful place Hong Kong used to be.
I think it's probably still lovely. Chris is trying to do his job here. Sorry.
My
the
friends
mountains,
left.
the water, the boats.
My friends have mainly
the dumplings.
Dumplings.
Dumplings. Come to San Francisco. Dumplings can be had here.
You say some of your friends have departed. More of my friends have moved in.
To Hong Kong?
It worked out. Yeah, like what?
Yeah, a lot of my friends.
I think they're commies, though.
Yeah, a lot of my friends in finance that I used to see there a lot, they've picked up and left over the recent years.
I had a friend who opened an office in Hong Kong right before the revolution and then had to shut it down shortly thereafter, taking a material financial loss in the process and coming out with some great frustration.
Yeah.
Other than that, I don't have any friends in Hong Kong.
Well, so this Fannie Mae report says one of three things needs to happen in order to return housing affordability back to where it was just 2019. So I guess 6 years ago now. What are those three things? Incomes need to rise 60% overnight. Now, granted, that'd be nice. But if incomes rose 60% overnight, do we think that would filter through into house prices? Probably. The 30-year mortgage rate needs to drop down to 2.35%, which, fun fact, at the height of COVID, the 30-year mortgage rate hit a low of 2.65%. So we need to have a crisis with more stimulus and the Fed's balance sheet largesse being used in a greater capacity than was used during COVID to get mortgage rates that low. Probably not happening. The third scenario would be an immediate 30% correction in house prices overnight. Now, I think about this in the area where I grew up and now where I live, just north of New York City. In 2009, at the peak of the global financial crisis, house prices declined by 15% that year. So what you would be pitching to people is if you want to get housing affordability back to where it was in just 2019, you're going to have to endure a loss to your home's value twice as great as the worst loss that you've ever seen in your lifetime. Which one of those three things are realistic or palatable right now for people? Are we going to get 60% wage increases overnight? Are we going to get a 2.35% mortgage rate? Are we going to look at a 30% reduction in home equity and just smile and take it? The only way out of this stuff is to build. It's the only solution. We've tried everything else. We've done all the environmental reviews. We've done the traffic reviews. It's happened. This is the choice. We can build something or we can accept that this is the problem in perpetuity. Dylan, you say that this is never going to be solved. Oh God, that's so bleak. That's so bleak. And I suppose
what do you mean bleak? That's the history of mankind. One group of human beings owns all the real estate. Another group of human beings does not.
And then what happens at the end of that?
And those who own the real estate give it to their children, and their children rent it to those who.
There is one difference. In fairness, while I completely agree with Dylan's historical analysis, one would be foolish not to, because it's just facts.
That's right.
There is one key difference.
Okay.
Real estate used to be the main source of wealth. This is feudalism.
Sure.
The main innovation of the Renaissance was to decouple wealth from real estate with the advent of banking and credit, mainly coming out of the Italian city-states. And so
mainly coming right out of here in Milan with the Met. I mean, this come on, I'm in the this
Medici's.
It was invented a block away from me. Come on.
So what you end up with then is the boom in trade, the boom in financialization, the birth of fractional reserve banking. You're welcome for that. And the end effect is that you can build wealth outside of just passing down the castle from one generation of tutors to the next or whatnot. And so you then have a different world, and that's the world that we live in now. But from a real estate perspective and from sort of owning property perspective, this is much more like history than like the past 40 years, which in this sense were an aberration.
Very frustrating turn of affairs in the housing market.
I mean, how about I would say here's a solution for you that's abstract and just to satisfy your angst, but multifamily housing. The whole idea that everybody has to have their own building is absurd
and strange.
So,
historically,
but this is the problem with that. And
this is an abomination. Who do these people? What are we doing? What are we doing?
And I'm very,
Everybody's got to have
partial.
their own 5-bedroom house. Everybody's got to be the king of the castle. Maybe you guys got to calm down and move into a building with everybody else, like everybody else always has forever.
Yes, that's all very, well and good, and like there are legitimate density reasons for why having more people living in a smaller area is better, right? Like if you are someone who's concerned about climate change, a 30-story apartment building in Manhattan does more than for a single-family
There's
home.
neighbors. It creates a more of a society, less isolation.
Yes and
It's less hatred, more interaction, more interdependence, more need to reconcile petty disputes.
Depends where you are in the income sphere, right? There's a lot of research out there that suggests that if you are in a very low income situation, the dense living actually becomes part of the psychosis that you deal with, the punishment of being poor, because you are inundated. Your senses are constantly inundated with the smells and the sounds and the sights because the walls are thin and there's just no privacy, right? You lack that privacy and your sense of safety is gone because your senses are always being inundated. So there's a balance.
Take a look at any hip hop album coming out of New York City circa early 90s. You'll get a very clean picture of what Chris is describing.
So like multifamily housing is good. Is it too dense? Yes, but also like there is this conception, and this is something, Dylan, that we want to address. Like there's the idea passed on from our grandparents to us who grew up in the post-World War II era that we were entitled to move out to the suburbs and have a plot of land with a green lawn on it. Right. And that is still very much, it may not be Gen Z's thing and millennials may be the very tail end of it. But for a large portion of the country, the notion is that like I work hard, I go to school, and then I get my own home. I'm not going to have to share with other people because I'll be financially independent. So that's a cultural break as well that I don't know that most people are willing to accept right now.
Then you can rent your house.
And there is a solution. It's just the solution is to build.
Me about owning it. You can rent it. You're going to be a renter then. That's fine. You can't have it both ways. You want to own something, you can own a multifamily. You want to be the king, you can either be born to a rich family that owns real estate or you can rent. Those are your two choices.
Or we can build, to Chris's point.
Or what?
There's just, or you can build, to Chris's point. There's just
build.
You can't build because you don't have enough money. Lumber's too expensive. Inflation is too high. You don't have the money. You can't do it.
What's that mean? Like men will do anything except go to therapy? Like we will do everything in this country except build the freaking housing.
Yeah,
we will do everything else.
There's all the room in the world. Apparently, we're lumber independent to the point where we're slapping tariffs on Canada, which is a big lumber market for us.
Yeah.
So apparently, that's not a problem because we're lumber independent. And if we are in fact slashing regulations, which is what oftentimes holds up construction, then you could say that if all of this is a benign kind of a thing, ultimately, then here we go. I mean, lots of the so-called Build Back Better agenda, only a very small part of it got actually implemented, but the interestingly named Inflation Reduction Act had a ton of infrastructure build out in it, and very little of it has actually occurred because of things like environmental reviews and what have you. So you unlock that, you can build a lot.
Yeah, I mean, I also have like this very blunt view about that kind of stuff, which is, if we don't build this, if we build this, this species may be endangered. Sure. If climate change is existential, that species is dead.
As is every other one.
As is everything else. So if you believe in this stuff, like, do I want to go to the movie theater at 3 or do I want to stop and get some, go to the grocery store and pick up ice cream? It's like, well, if I want that ice cream not to melt, I probably shouldn't go to the movie theater right afterwards. I might have to skip the movies and go back home. There are trade-offs in the world, right?
Yeah.
So like, if we care about housing affordability, you just got to build. If you care about climate change, you got to build. You got to do it. You have to do it. That's what we should be doing. We should be building. Let's get back to building. Can we do it?
The problem is the word should implies some sort of right and wrong, which is non-existent in the world of the Trump administration or artificial intelligence. There is no right. There is no wrong. There just is.
But what there is a trade-off. I mean, you can either like to have your environmental reviews or you can like to have cheap for housing. You can like to have ludicrous rules saying you're not allowed to have the cheaper aluminum windows facing your street. They have to be made of wood because things have to look like the house that you bought that was built in the 1950s. Very granular example, I know. That's for those of us from San Francisco. And you could do that, and that's fine. Or you can have cheaper housing. And the view from the public seems to be that what they want is lower inflation, hence what we've just seen in the U of M numbers, hence the survey that you showed me earlier, Chris, from Bloomberg, that says that folks think the administration is doing maybe too much on tariffs and not enough on bringing inflation down.
So what should maybe they do? Should they stop threatening to raise prices?
Maybe build more houses? I don't know.
But how do we do that if we get rid of all the people who are going to build the houses? How are we going to do that if lumber costs 25% more expensive?
Okay. Can we go back to the beginning, please, in the last couple of minutes? Because I'm unsatisfied with the beginning.
Shh. Talk to me about the beginning. There was light, there was darkness.
How is it, good sir, that we can have hotter than expected inflation, we can take rate cuts off the table, and the stock market doesn't care?
I think the reality is that it does. And if it didn't care, it'd be rallying.
It does care, Dylan. Stocks are an inflation hedge. That's why the NASDAQ is higher now than it was before the inflation data came out.
Okay. I feel like these are like I feel like we're like talking I feel like we're inventing words after this is like, you know what you're doing.
I mean, the bottom line is that neither major index, not the S&P nor the NASDAQ, has gone anywhere. And the same sort of bottom line that we had on this yesterday and the day before and last week and almost every single day for 2.5 months is choose your own adventure. This market does not want to have conviction. It is still stuck in the same up and down 6% range where it got into in early December. And if it was shrugging off these things, it would be shrugging them off. Notice, since the last swing high, what is the market doing? It's setting lower lows. Maybe, but it's definitely setting lower highs. After every single shock, after the DeepSeek shock, we've not revisited the high. After the first tariffs shock, we've not revisited that high. It's a lower high. After last week's gap, we've not revisited the high. It's another lower high. So is this a market with incredible resilience and conviction? Where?
Ye of little faith. Dylan, I came across a really interesting stat about corrections in the market and how often they occur. Since the low on March